you're somewhere out there, somewhere far away. I want you back.
Good morning, traders. How we all doing today? Hey, what's up, guys? Skylar, hey, welcome back. TikTok Mom, Casey, Catherine. Yeah, what's up, everybody? Everybody on YouTube, how we doing? Is this your first time here inside? Casey's like, nah, please don't, Josh. If this was how chat was every single day, it would just be you, buddy. It would just be you trading by yourself because you suck. You suck. What's up, team? And good morning. Happy, what day is it? Hump day. That's what I'm talking about. Hump day, baby. I love hump day so much, I think I'm going to buy a camel, a little pet camel. Anytime it's hump day, I'll bring my little pet camel in here, you know, and be like, hump day. Anyway, team, what's up? What's going on? Ladies and gentlemen, and happy Wednesday, happy hump day. It is September 22nd. The full moon is over. It's gone. So I can stop feeling weird, feeling foggy. I hate full moons. I don't know. I think my wife gets into my head a little bit with that whole full moon crystal thing. Anyway, good morning once again. If you guys are just now tuning in, I see we have a lot more people joining us on YouTube. What's up? What's going on? Hit me with a big old good morning and hit me with where you guys are tuning in with. Where are you guys from? Indiana, Florida, Montana, Canada. Where are you guys tuning in from over on YouTube? And everybody here, you guys hate full moons too? I don't like full moons. I've been like, why am I felt out of it the last couple of days? Right? Well, I know why I'm really out of it. I know I'm not in the zone because I'm freaking moving. No one likes moving. And there's a lot of behind the scenes stuff. So yeah, that's why I've been a little distracted. I haven't been as focused. I haven't been in the zone, but I'm also going to blame it on the damn full moon, right? Making things 10 times worse. Inject that coffee and get going for the day. Let's go. Let's have an awesome day, team, and let's make some big time profits because you know what? I'm fired up. I feel like I'm in the zone today. I'm ready to go, and I'm ready to rock and roll with the best trading community in the world. Let's be honest. You guys are what makes Alpha Day Trading the best. This is the best of the best of the best trading community out there, so I appreciate each and every one of you guys for tuning in and showing up every single day and taking that initiative. And you beautiful sons of people, I'm not gonna say the B word, over on YouTube as well for the support, tuning in every single day. Russ, Ralph, Ed, Kelly, Gerald, Scott, Tyler, Joe, Andrew, Russ, Dawes. Woo! AF, what's up? What's up? Good morning once again, and happy Wednesday, team. It is September 22nd, 8:50 in the market. And we got some stuff to talk about today. Yes, we do. Where's the opportunity? Where is the profit? Well, I have about 5 stocks on watch right now. The top 5 stocks that I'm going to be keeping on watch. Looks like we have SAVA is a new stock that we're going to be talking about. This one is slowly creeping up on the leaderboard. There we go. Good morning, you sons of bears and bulls. I like it. Yes, not sons of, but sons of bears and bulls. I can start using that. That's good. Thank you. Thank you very much. We're going to trademark that, okay? But yes, so let's go ahead and just dive into it like we do every single day, talking about what we have, right? The news, the volume, gap up, the chart. What has the most focus? What has the most attention from traders? And that's going to determine where the opportunity is going to be for that big time profit. So let's not waste any time, guys. Let's go ahead and dive into it. But first things first, let's go ahead and open up that morning stock newsletter and dive into everything that has news, my personal watch list, everything that we are watching for the day. So again, good morning, team, and happy hump day. I hope everybody had a fantastic evening and that you're all fired up for a great day ahead. Congratulations to everybody inside the chat who was locking in some big time profits yesterday. I mean, my goodness. I step out for lunch. I come back and you guys were holding it down, making some big time profits. I came back, I was like, wow, I don't even need to be here. I'm out. I'm leaving. But you guys absolutely crushed it. So once again, congratulations to everybody locking in some amazing profits. Keep up that great work. And let's make this week one of your best weeks ever. We're going to do it. We're going to make it happen, guys. We have 3 days to go, 3 days of opportunity, 3 days of profits. Let's make it happen, team. All right. So, stocks with news. We have MRIN, ALPN, SFIX, AEMD, CRTD, SFIX, and ONTX. And nearly all of these stocks are stocks that we're going to keep on watch. Let's start with the number one stock with news. That's going to be MRIN. Shares spiked higher following an announcement from management that the company entered into a revenue share agreement with Google. And they plan, right, to develop its enterprise tech platform and software products. So again, entered into a revenue sharing agreement with Google. That's a pretty good press release there on MRIN. And again, that's why MRIN is currently number one on the leaderboard. So MRIN up 82%, trading 13.5 million shares. On average, MRIN does trade 27 million a day, but we still have a long day ahead. From 9:30 to 4 o'clock, we've already traded half of that average volume here in pre-market alone, and a majority of that volume started to move in around 7 o'clock. So over the last 2 hours, we've traded about 13.5 million shares. When the market opens, I guarantee within the first 15 to 30 minutes, we have exceeded that average volume. And I do think MRIN is going to be one of the top stocks today, assuming it doesn't just crack and fade and fall. Why do I think MRIN has a lot of great potential to the upside? It's not just because of the news, right? The news is really good. It's not because it's a low float stock, right? This stock could definitely rip and run. But look at that daily chart, guys, right? Back in June, early July, right? This stock going from around $2 all the way to $27. Why was that? Right? Well, we had good news. We had momentum. We had good volume. MRIN is a former supernova stock. So when stocks ripped in the past, right? 100, 200, 300%, MRIN, right? It's a former supernova stock, does nothing, puts in some kind of market structure on the daily chart, followed by good news. Those stocks can definitely run again. And what happened with MRIN? Big rip back in June, early July. Coming down, putting in a W, right? Look at that little W, that market structure right there, above $5 on the daily chart. And now another solid press release here on MRIN, causing the stock to gap up 82%. And someone knew something. Someone knew something about MRIN, because yesterday around noon, we had a pretty big call sweep. October 15th, 7.5 calls near the ask, 1,200 of those calls were purchased yesterday around noon, and then boom, look at that. Someone knew something. MRIN, I think, has a lot of great potential, not just because of the news, not just because it's a low float stock, but because it's a former supernova, and we're just now coming off of a nice double bottom on the daily. I think we could see this stock have a lot of great potential today, guys. All right? Yeah, Nancy. It was Nancy. So, MRIN, right now, we have light support right around that 1025 level. Right around that 1025. We could definitely see $10 hold up as support as well. Natural support. We do have some levels on the daily chart right around $10 as well. But the better level, right? The better level of support here on MRIN is going to be back down towards around that 945 to 950. So if 1025 cracks and it cannot hold, right? We have a slide uptrend as well. So not only do we have this slide uptrend from pre-market, we also have those prior highs, aka new support, right around that 1025, 1026. If we crack the uptrend, we crack that level, we may see it bounce at 10, but if we crack $10, we're looking to find support possibly back down towards around that 940 to 950 level, okay? If we can hold above that 1026, 1025, and this uptrend, we do have potential back up towards around $11 pre-market highs. Anything over those pre-market highs, we have room to 1150. Anything over 1150, we do have a nice big window up towards around 1243, 1278, and then $13.50. Now, MRIN could definitely continue to rip and run, right? Anything over 1350, it does have some decent room up towards around $15. Now, again, it could break 15. Where could it go? Back up towards around 1733. Right around 1733, right? So again, MRIN has a lot of room to the upside. It could definitely hit 20, 25, retest those highs. If the market's hot, if traders are here, depending on how much FOMO, really, at the end of the day, how much FOMO is going to be behind MRIN. How high is this stock going to go? It has a lot of potential to the upside. It has good news. Now it just depends on how much FOMO is around MRIN and how high traders want to take this. But either way, guys, either way, there is still a lot of great opportunity to the upside. Again, right now off that level of support, back up towards those highs around 11.16, up towards around 11.50. And then anything over 11.50, your next target is going to be $12.43. So MRIN, definitely one of the top stocks we should be watching today. Number 2 is going to be AEMD. All right, so AEMD, guys. Previous day mover. Thank you, Beth. Right, so the most recent filing from AEMD was an 8K. That was 5 days ago. I was hunting for news. I was hunting for filings. Didn't see anything yesterday or today, but their most recent article, the most recent press release filing was 5 days ago. Again, thank you, Beth. They're on AEMD, and it was a Form 8K. So AEMD had a nice day yesterday, really nice day yesterday, and we're just seeing some continuation here with AEMD. So again, midday, nice little pop, didn't really do anything the rest of the day, and then traders just said, hey, AEMD is that post-market trade, baby. This is the one we're trading, and this stock had some great action towards it, right? This morning, right? Traders wake up. What was the best mover there in post-market? AEMD, all right? AEMD it is. Let's go ahead and buy this bad boy up. So that's why it's still moving on up. Again, it had a nice little pop there yesterday. Traders just continued to buy this up there in post-market. Obviously, it was one of the top gainers in post-market last night. So when traders come back in the pre-market, that's the number one stock that they resort to. So again, AEMD right now is holding up really nicely with all these technicals, right? So again, it's in a nice little uptrend. We can see that visual uptrend. We just pulled back to that 475 support. We do have a good amount of room to the upside, guys, with AEMD, all right? AEMD is trading about 6.4 million shares. On average, it trades just shy of a million. So we are trading high relative volume, another low float stock coming in at 15 million. And this stock right now, again, has that support right down towards around 475 to 480. A little bit of resistance at 5, just natural resistance, right around $5. But anything over 5, guys, we have room back to 550. We do have room up towards around 595, $6, and then possibly up towards around 622, right? 622. And then if we break 622 today, right, on AMD, if AMD ever breaks over that 622, 625, this stock has a lot of room to the upside. 7, 8, 875, 9, 10. I mean, this stock could definitely take on off. So I want to keep this one on high watch. But right now at this point in time, we do have support at 475. If we can get back above 5, like to see that turn into new support there, right? Psychological, natural level of resistance and support. $5, that whole number. We have room to 550. We have room to 595 and possibly 625, right? Those are going to be our next 3 levels to the upside. Anything over that top level of 625, this stock could definitely start taking on off. 7, 8, 875. I mean, it has a lot of room to the upside looking at the daily chart. So AEMD, again, there's no fresh news today. The last filing was 5 days ago, and that was an 8K filing, but this stock did have a pretty random spike yesterday, right? Traders move into it in post-market. It was one of the top gainers in post-market. Traders resort to move back into AEMD this morning. So right now it does have focus, right? Right now it does have some attention. It has focus. And assuming that the technicals continue to hold on up, right? And traders are here and it's moving and it has volume, there is definitely some opportunity to the upside. So I do want to keep AEMD on watch. Again, to see if this one can hold above those key levels, get that leg up to 550. $6, 625, and then who knows? Maybe this is the number one stock of the day, and this is where 80% of traders are. And if that's the case, there is a lot of room to the upside here on AEMD. All right, and that is currently number 2 on the leaderboard, up 30%. Moving on, number 4 is going to be ONTX, guys. So ONTX dropped a press release right around 8 o'clock. So ONTX, a clinical stage biopharmaceutical company focused on discovering and developing novel products for patients with cancer. Today announced preliminary safety data from an investigator-initiated phase 1/2A trial for oral. Catherine can help me out with that word because I don't know it. But keywords, right? This is a company that's focused on discovering and developing novel products for patients with cancer. And they're announcing preliminary safety data from an investigator-initiated phase study, all right? So cancer-related, preliminary safety data, right, from that investigator-initiated phase 2. We'll probably see some more press releases coming out here in the coming weeks on ONTX, right? We'll probably see some more press releases over the next couple weeks with ONTX, I would only assume. So again, I'm probably going to add ONTX to like a back burner prior day mover list just to see if ONTX does continue to have some press releases come out after this press release with maybe more updates, positive data from phase 2 trials, anything like that on ONTX. But this is the news today, and as why ONTX is currently up about 18% in pre-market, and is why we're trading about 5 million shares. So again, up 18% in pre-market here on ONTX, right? 5 million shares traded. On average, it trades 300,000. So again, high relative volume. There's definitely some activity here with ONTX. There's definitely some attention. The float is 14 million. So another low float stock here on ONTX. Quick spike here right out of the start of the day, up towards around 654. Right now, pulling all the way back down to our 569 level of support. Now, honestly, that I fine-tune this level, I would actually bring that level down maybe just a little. Actually, no, right around that 570 level, right? It was a little bit of a bounce play. We had resistance. Now, we could see it down towards around like 564. So I'd actually say maybe 564 at the lowest is a pretty decent level of support here on ONTX from prior resistance from the daily chart. Now, if we crack below that level, I would think we could see this down all the way towards around 534, right? So right now, we're not touching ONTX. Right now, it's selling off. Right now, sellers are in control. Why do we want to be trying to catch a dip on this play, right? Let's wait for this stock to come down to one of these levels of support, set up, market structure, reversal pattern, doesn't matter. Wait for the stock to set up, and then let's look to attack if there's any opportunity with ONTX. But I do think ONTX is worth watching. We have good news. We have good volume. It's a low float stock, but right now, sellers are in control. It is giving a lot back. Put it on a back burner watch list, right? Keep this one on watch above that 564 level. If we crack 564, keep it on watch around that 534 level. Let's see if it can hold on up and get some activity and some attention to move back to the upside, right? And if we can hold these levels and we do start to see ONTX get some hype and it starts moving back on up, we could see it back up towards around 628. We do have room to 660. Anything over 660, we have room to 748, and then 795 there on ONTX. All right. Number 3 on the leaderboard now is POAI. Actually, it's number 4 on the leaderboard. POAI. What's going on with POAI team? All right. So this morning, POAI, such a great press release, right? Such a phenomenal press release. I hope you sense the sarcasm. So POAI announces, wait for it, newest board member. Whoa, man, that fired me up. How about you guys? Are you guys fired up right now? What a great press release, right? Oh my goodness, this stock's gonna absolutely take on off. That is one of the best press releases that I've seen in quite some time. You know, woohoo! It's not a great press release, guys, at all. I hope you guys sense the sarcasm. So, still can't see it. Oh, I thought you were having trouble. Okay, but yeah, so POAI is a stock that I think has good long-term potential, right? I mean, good long-term potential. What they're doing is pretty cool. And, you know, it's definitely a riskier one because it's, you know, a very cheap penny stock. So again, it's a riskier long-term investment, but I think long-term POAI has a lot of potential behind it. But today, as far as like today, a day trade, right? Again, we're trying to eliminate the noise, right? We want to eliminate the noise, focus on 3 to 5 stocks that have the best potential, right? And how do we find out if a stock has a lot of great potential? Really starts with news, and that really generates that traction, that volume. So again, POAI, it's not really a hot press release, guys. They're announcing a new board member, all right? So POAI has a press release. There is a credible reason for it to be moving up, but it's not hot. And that's exactly why POAI isn't really doing all that much, right? It's not really doing all that much here on POAI. It's up 17%. It is trading about 500,000 shares more than it does on average. It's a medium float stock. It's 60 million in float, but right now, it's just not doing all that much. It doesn't really look like there's a lot of opportunity. So what I would say is just add it to your watch list. as a back burner stock, right? It is trading slightly above the average volume. It's a medium float stock, something that could be slow and steady to the upside if traders decide to get POAI going. I do not have time for that. And yeah, and we'll just keep it on watch, guys, right? It definitely has some hype already, the way it is around POAI. We'll see if this stock can hold on up and get some action towards it today. We have 112 support on POAI, upper resistance right around 125, 134, and then 140. So right now we have support around 112. If we crack 112, support's back down at $1, right? Right around $1 on POAI. But let's see if we can hold above 112, right? We have room to 124. We have room to 134 and then 140. Anything over 140, you could see POAI up towards around 157. So again, announcing new board member, we are trading slightly above the average volume, medium float stock. Definitely something that can be slow, steady, and consistent today. They're on POAI, 112 support with resistance right now up towards around that 124, 125. Anything over that level, you have room to 134, 140, and then 157. So again, POAI is not one of the top 2 to 3 stocks I want to be focused on right out of the gate, right? I definitely want to be focused on MRIN, right? Wouldn't you guys agree? MRIN looks like it has some great potential right at the start of the day. AEMD is another stock that I want to be focused on right out of the start of the day. Even ONTX, just because it's a little bit better of a press release. But then you can't forget about ATER. Yeah, the car's extended warranty. Hi, we've been trying to reach you about your car's extended warranty. It's about to run. No, shut up. Quit calling me. But we can't forget about ATER now. ATER doesn't have any fresh news. But ATER was something we called out weeks ago around $6.50. The stock ran over $19. We called this one out again early this week. Don't believe me? Go check out the morning newsletter or scroll through alerts here inside a chat. We were looking at ATER on Monday above that trend line. And since the stock came back down, it held above $10. It held the trend line. ATER since that point in time is up towards around 1468. So we've been all over ATER the past couple of days, right? ATER still has a lot of great potential to the upside. Right now, we do have light support off yesterday's highs of $14, right? We were talking about this morning, $14 support. Now, if we cannot hold above $14, we still have this really nice, beautiful trend line that we can hold above as well. So even if we crack below 14, I still think we have great opportunity here on ATER, especially if it comes back down to this trend line. We could look to grab an entry off this trend line for the next leg up towards around $16. However, if we hold 14 and we break over 1468, we have room to $15, and then we have room up towards around $16 today on ATER, and possibly even up towards around right there around 1667. I think it was like 1667, and then possibly back up towards around 18, and maybe even back up towards that spiking high right around 1903 there on ATER. So again, we have trend line support. Right now, we do have some support off yesterday's highs around $14, with resistance being these pre-market highs of 1468. Anything over that 1468, you have room to 15, room to 16, room to 1667, and then bigger windows to the upside up towards around $18, and then possibly $19 here on ATER. So again, going back to POAI, right? Do we really want to be focused on this stock right out of the gate? I don't think so, right? Because we have better opportunity on ATER. We may have better opportunity on ONTX. We definitely have better opportunity on AEMD and MRIN. But I still think POAI should be added to your watch list, right? Just in case it does start to move on up, because there is definitely some opportunity with this stock. But right out of the gate, I would say focus on MRIN, AEMD, ATER, and ONTX. All right, team? And then we had a couple other stocks moving up on the leaderboard. WIMI was not on the leaderboard about 20 minutes ago, but right now, currently up 13%, trading 1.2 million shares, right about a 50 million in float stock. Why is this stock moving on up? So WIMI, Hologram Cloud says 6-month revenue increased 202%. Net income increased 40%. So again, they're reporting a 6-month revenue of around $80 million. And that 6-month revenue had increased 200%. And their net income increased 40%. So that's not bad, right? They're doing good. Seems like it. So again, right now, WIMI with a credible reason to be moving on up. WIMI again is a 50 million in float stock, currently up about 18%. Now it's down a little bit more here on WIMI, up about 10%, but it is trading some volume. So another stock similar to POAI, right? Add it to your watch list. If this stock starts moving on up, let's get prepared just in case it provides us with an opportunity. So let's go ahead and dive into the daily chart real quick and see exactly what we have. Well, right off the bat, we can see that spiking high up towards around $5. Resistance, anything over that spiking high into our next spiking high right around the 200 SMA. That's $6. Right now, support on WIMI from the daily, if we can really try and gauge the best level of support on this stock, I would say back down, 418. Well, that was actually resistance, so we're still below that level. So 418 resistance, and then back on down towards around those lows at 371, and then 350. So right now, WIMI has support right around 371. Top resistance around that 418 level, 423 pre-market high, 418 from the daily chart. Breaking over that level, it has a lot of room to $5, guys. A lot of room to 5, then a lot of room to 6 there on WIMI. So another stock like POAI, there is a credible reason for the stock to be moving on up. Nothing awesome like MRIN, right? It's nothing like the revenue sharing deal with Google and MRIN. That's a pretty hot press release, but there is a press release. There is a reason for WIMI to be moving on up. So just like POAI, I would definitely recommend adding it to our watch list. WIMI. And just keeping this one on watch to see if it does get some activity, if it gets some volume, as there is some opportunity to the upside, guys. Again, breaking over that 418, 423, a lot of room to $5, potentially a lot of room to 6. Right now, supports at 371. So again, we talked about MRIN. We know what's going on there. AEMD, POAI, ONTX. SAVA is another stock that's starting to move on up here in pre-market. SAVA announcing top line results of 12-month interim analysis from open label study evaluating Alzheimer's disease. Improved 3.2 points off their baseline over that 12 months. So again, the key words, the takeaway, they're announcing top line results from their ongoing 12-month interim analysis from open label study evaluating, keyword again, Alzheimer's disease. So we do have really good news here on SAVA, and I know a lot of you guys like SAVA, especially when this stock is moving. So SAVA, where could we see this bad boy go? All right, so let's go ahead and mark up those levels. Right off the bat, 65.17 coming right from the daily chart. We ended up hitting highs right around 68.65. So right around that 65 to 68 is going to be a level to the upside as far as the targets. We do have the 200 SMA right around 54.19. That would be a decent little level of support if we do come back down here on SAVA towards around 54. Could definitely see it bounce and hold above that 200 SMA. And right now, you have the 20 EMA right around 57.92. And that's just about where we came down to here in pre-market, right around that 20 EMA. So support right now, 58.35. 58.35 current support SAVA with top resistance between 65 and $68. If we crack 58.35, we have room to fall down to 54.19. Now, if this stock breaks over these highs and continues to rip and run to the upside, where could we go? Up towards around $70 next, up towards around 72.87, and then we have a lot of opportunity up towards around $78 here on SAVA. So definitely SAVA on high watch, and I would even be adding that to our options watch list here on SAVA. So again, let's keep that on watch. Really good news here on SAVA. It's a low float stock for being a large price stock as well. 37 million in float. Over the last about 20 minutes, We're trading just about 2.8 million shares. On average, it trades 7. So we'll definitely surpass the average volume today. Again, it's a low float stock, currently up 14%. I would be personally watching SAVA for options. And speaking of options, we're watching LCID today, guys. LCID, once again, 2 things we're looking for, right? Number 1, we get rejected off yesterday's highs and crack the uptrend, I'd be looking for puts, right? Right off these highs, right? Right off these highs. If we get rejected and crack this uptrend from Monday, I'd be looking for puts down towards around 26, down towards around 25. If we hold the uptrend and break over yesterday's highs, I'd be looking for calls up towards around 29 and then 29.81 there on LCID. Definitely on high watch today for options. SFIX, all right? SFIX, we have a lot of price targets being raised, but we also had some news on SFIX today. What was that with SFIX, right? They were up 13% this morning on Q4 results, right? So we have Q4, pretty good results there on SFIX, and right now this stock is up 12%. So I want to keep SFIX on watch above 38.32. Coming right from the daily chart, right? Not only is it prior support, but it's also that 20 EMA. I want to keep SFIX on watch above 38.32. We have room back up to 41.90, 42.98, and then $43.80 here on SFIX. If we break over that 44 level, right, that third target that we have, we could see it up towards around that 50 SMA, which is right around 45, 47 here on SFIX, all right? So those are going to be the top 3 stocks I'm watching for options. SAVA, LCID, SFIX. Now, why are we even watching stocks for options? You're probably like, Josh, yesterday you said you're not even looking at any other thing for options, right? You're not looking at anything. You're focused on the SPY. That's where the volatility is, right? Well, what's today, team? What happens at 2:30 today? Anybody? 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 Does anybody know what takes place at 2:30 today? The FOMC meeting. What typically happens until the FOMC meeting? The market sits sideways. Less volume, less volatility, right? So with that being said, we have investors kind of sitting on the sidelines. We have traders really sitting on the sidelines before the Fed meeting. So typically we see choppy sideways action. That's going to allow some of these other stocks to do their own thing and not really have the overall market determine the direction, right? If the SPY was just dumping down today, would I really want to go long on LCID? I may not think about going long, right? SAVA, I don't know. SFIX, probably not, right? If the SPY was absolutely dumping, if the SPY was just ripping to the upside, would I really want to try and short anything else? No, because the market may move in that similar direction in sympathy with the overall market. So the fact that we have an FOMC meeting today at 2:30, typically we see sideways movement, choppiness up until that FOMC meeting, which will allow some of these other plays to kind of just do their own thing, in my opinion. So I'm watching SAVA, I'm watching LCID, I'm watching SFIX. Then around 2 to 4 o'clock, I'm watching the SPY, I'm watching our inverse ETFs, looking to see how the market reacts when Mr. J. Powell speaks today at 2:30. Okay? So that's my options watch list. And now my back burner watch list. Write these down. If they start moving on up, at least you know that we're watching these for today. Don't really want to spend too much time and really dive into everything. We have a great intraday watch list to get us started. We have a great options watch list as well. But we do have some back burner stocks that I still think we should keep on watch just to see if they do start moving to the upside. Those stocks are going to be LIFE over 12.34. Room to 13, and then anything over 13, 14, and $15 there on LIFE. So watching LIFE for a new little high over 13 today. Still watching LPTX. Another great alert from yesterday there on LPTX. Got some great action. About 10 cents away, 5 cents away from our 350 target. Still want to keep LPTX on watch just to see if it still has some juice left in it. Definitely want to watch CRVS today as well. SDC, cannot forget about Small Direct Club. SDC, a lot of hype around this stock being the next short squeeze. So I definitely want to keep that one on watch to see if it continues to move on up. Definitely want to keep HLBZ today on watch above 25. This one holds above 25. We could see some more action and more activity with HLBZ. NNVC, want to keep this one on watch today above $5.70. And then RWLK, I want to keep this one on watch today as well above $2. So back burner plays. These are prior movers. Stocks that have moved yesterday, stocks that have moved this week or last week. RWLK, NNVC, HLBZ, SDC, CRVS, LPTX, and LIFE. Back burner sleeper play stocks that could get some action. But right here to start the day, guys, MRIN, AEMD, POAI, back burner, WIMI, back burner, ONTX, watching that one, ATER, definitely watching ATER, and then I'm adding SDC to the intraday watch list as well. Option plays for today, right? Up until 2 o'clock, SAVA, LCID, SFIX. Around 2 o'clock until the end of the day, I'll be watching the SPY as Mr. J. Powell speaks during our FOMC meeting today, guys. All right, so that's what I'm looking at. Why I'm looking at it, getting us prepared for the day. So when that opportunity presents itself, we're ready to go, right? We've done our due diligence. We're prepared. We're just waiting for one of these stocks to provide us with a great opportunity so we can make great profits. So again, that's what I got. Now, we have about, 6 minutes until the bell. Do you guys have anything that you're watching that you want me to take a look at before we get our day going, guys? Is there anything that you guys have on watch that you want me to check out? AMD, we can look at AMD real quick on the daily. Yep. All right, so let's go look at AMD real quick. But one thing to keep in mind, one thing to just be mindful of, right, with AMD, Facebook, Apple, that if the SPY dumps, AMD and all these other stocks are going to dump, right? If the SPY starts ripping to the upside, AMD and a lot of these other stocks are going to start ripping to the upside, right? As the overall market is aggressively moving down or aggressively moving up, every stock is going to follow sympathy, right? If you look at the SPY, and you look at Apple, you look at AMD, and you look at the charts, right? They move very, very similar to one another. So we can definitely analyze AMD, but I would wait for the market to become more steady, right? Either just be neutral, right? Or just be in a steady uptrend or a steady downtrend without a lot of this crazy up and down volatility, because that's definitely going to make it harder for you guys to trade the AMDs, to trade Facebook, to trade Apple. Because again, if the SPY in the overall market starts overreacting and there's a panic sell-off and it starts dumping, I mean, regardless of how good your long position looked on AMD, you're probably going to get stopped out of that trade because it's going to follow suit with the overall market out of sympathy. So AMD right now, we did come down and we never lost that 102. Now we lost it intraday, but when we look at the daily chart on AMD, I'm sorry, we did lose that 102 a little bit. I don't even know why I have 102 marked up. Honestly, I don't even know why I have 102 marked up. That level should have been right there around 101.43. So if we look at it, we've never lost that level here on the daily chart. Right around that 101.43, we did have $100 natural support that we held above, and we have a slight gap that needs filled, right? So that's going to be your first level of resistance, would be back up towards around 103.87. Now, again, it could be in a flag formation, right? Here on AMD, it could definitely be in a little bit of a flag formation. Again, nice big leg to the upside. It's been consolidating in a flag-like fashion. So I would continue to watch AMD, right? Nice big rip. It's consolidating. It's definitely in a flag formation. So I would just be looking at this for a possible swing trade in the coming weeks, coming months, if we ever start to see this breakout of this daily flag formation that we can clearly see is starting to form right now on AMD. So keeping that analysis extremely simple, I would keep the downtrend on watch and the other downtrend off the lows. Now, if you want to play inside this pattern, right, you could definitely look to take it back up into this downtrend and then maybe flip short back down into this downtrend off the lows. Then flip long and look for the break out of this flag formation to the upside here on AMD. And right now, support on AMD is off those prior highs of 98.66. 98.66 is one of the better levels of support. So what we could honestly see happen here on AMD is this stock continue to consolidate, right? Nice big leg up, consolidate in this flag-like formation little by little until it hits that level of support. We see buyers move in off that bounce off support. It helps confirm the flag, and then you start to see it break to the upside off of this flag formation, but also seeing some buyers move in possibly off that level of support, which is prior resistance there on AMD, right around 98.66. So that's what I would kind of expect to see on AMD if we continue to hold on up, assuming the market doesn't completely dump and everything else just follows suit with it and all these technicals really become null and void. Again, nice big leg up, period of consolidation, definitely in a flag-like formation. We could definitely see it come down to that level of support, find it, hold it, see buyers move in to get the break of these flag formation, and we could definitely see AMD ripping and running to the upside here into the year, assuming the market does good into the year here on, just the market, but then AMD could definitely work out as well, guys. So that's what I see right now on AMD. It's just in a nice little flag formation with 98.66 support on the daily. I would not be playing inside of the flag during this time of uncertainty with the market. I would be sitting on the sidelines, really just wait to get an idea and a clear sense of the direction of the market. Are we going to continue our uptrend? Are we still in a bull market? Are we starting to head into a bearish market? Are we going to start, retracing 10, 15%? Are we going to come back down to the 200 SMA on the SPY? Really just trying to get a sense of direction in the overall market. And we still have a lot of stuff in the news that's still kind of wide open. It's up in the air, right? There's no definitives yet to really guarantee, okay, this is the direction we should see the market go. So we still have a lot of things that need to be discussed, that things are still going to be revealed in the coming weeks. Evergrande, are they going to get bailed out? Are they going to default on this payment that's coming on up? If they default, how does that affect the market? If they make their payment, they're not defaulted, but again, can they make their next payment? Is China going to help them? All of these things, guys, everything that's been going on in the news this week. Need to wait for some of those things to be cleared on up, get an overall sense of direction in the market, and then we can come back to stocks like AMD and say, all right, cool, let's take this for the flag break for a multi-week, multi-month swing trade, say back up into those all-time highs, right? That would be my recommendation. That would be my opinion. I would be personally sitting back, relaxing, waiting, right, for some of this to be cleared on up, and then look to see how these technicals look at that point in time for some possible swing trades coming on up. But assuming everything does well, AMD has a very nice technical setup, and I definitely think AMD has some good upside potential based on what we see right now today. Woo! That was a lot, but again, I like to be very thorough and explain myself to the best of my ability. So market's open, team. Let's go ahead and rock and roll. Let's dive into it, guys. Let's find the great opportunity, and let's make some solid profits. Well, there goes LCID. She said, we're just going to go ahead and rip and run right out of the gate. Shapow! Let's go. All right, cool. SDC out of the gate. Nice big little rip to it. SDC right out of the gates. ATER, same thing out of the gate, breaking on over that 1466 level, right up over 15 bucks there, right around 1520. ONTX has good potential off that 564 team. Right around 564 is a good level of support. We are watching WIMI and POAI as our back burners. And AEMD, guys, AEMD, we're right off that trend line above that 475. I do want to keep AEMD on high watch right around this level and see if it's actually going to hold on up here on AEMD. And as you guys can see, I am tradeless on the day, have no open trades, and as soon as I decide to take one, if I see something, I'll be ready to go, guys. And I like AEMD for a couple separate reasons. Broke the downtrend, respecting the downtrend as new supports. Above 475, and I'm going to take a stab on AEMD, guys. I'm going to just take a stab, right? As I'm talking about it, breaking the downtrend, coming back down to the downtrend, and retesting it as support. We have this massive uptrend as well, and we are above that 475 level. So I want to give AEMD a shot here, see if we can have the stock break back above 5 and start getting some action again to $5.50, $6. We do have some good potential to the upside. Right now, my stops are going to be under 475. So right now, I'd have to get my stops right around that 475 on AEMD. I do think this one today has some good potential to $5.50 and then $6. Once again on AEMD for those 3 separate reasons. Holding above 475 support, coming back down and retesting the downtrend, right? Resistance as new support. Also respecting our massive uptrend as well here on AEMD. A few separate reasons to where I wanted to go ahead and get my feet wet with a little starter position here on AEMD team. There it's going. Alrighty. Tried to get a quick little pop there. Don't wash out on us. Oh my gosh. Rug pull city, baby. Rug pull city. That is very unfortunate when that happens. Like, good setup too, guys. Few separate reasons to get involved, but rug pull city. That is very, it could be aggravating when that happens, guys. Could definitely be a little aggravating when that happens, but, you know, it is what it is. That's the risk of trading. It had such great potential, good volume, and then out of nowhere, kapowie! Seller said, we're going to just completely dump on you, buddy. So we're still good above 475 on AEMD here, team. I do think AEMD has good potential, assuming that it doesn't just continue to try and attempt a nice little move up, and then just sellers come in and pull the rug out from underneath everybody. Right now, really have to have this stay above that trend line, stay above 475, stay above the downtrend as new supports. Let's see if buyers can move back in and get it going, but stops right now are at 475 for me, guys. That's where I would walk away from AEMD, is right around 475. Actually, I'd go 469 just to give it some breathing room underneath that low here. I would actually go like a 469 on AEMD. But really depends on the price action, the volume, and how we're looking over the next couple of minutes here. Right now, I'm not a fan of AEMD anymore. Not a fan right now at this point in time. You know, it was looking good right out of the gate, but that big nasty rug pull just got me not really liking it all that much. So let's see if it can turn around here, guys. Decreasing volume pullback. Let's see if it can turn around. I'm going to go 200 shares on AEMD now, and I'm going to put a hard stop in the system right at my 469. So AEMD, I have 200 shares, 469 stop right underneath those lows there at 469. And I'm going to go ahead and go bloop, put that in the system. Full transparency, 100 share entry at 497, brought my cost basis down a little bit to 487, and I'm probably going to get stopped out there at 469. It was a good trade. I'd take it again. Just was not expecting that nasty little rug pull there. It was looking good out of the gate. We had 2 to 3 separate reasons to get involved, but hey, a stop out's a stop out. It happens. MRIN looking a little weak now, cracking below its trend line. ONTX slightly lost momentarily that 564 level. Lost the 564, but right back above that 564 now. ATER has the best of the best action right now, the best of the best volume, getting a lot of hype to the upside. How's SDC looking? SDC's not looking all that bad either, but right now, my focus is here on ATER. My focus right now is on ATER, looking to see if this one can actually hold on up here at the start of the day and not, you know, attempt these nice moves to the upside and then just come crashing on back down. Nothing right now on SAVA. LCID, a little bit of a false breakout there. SFIX is doing nothing right now at this point in time. The SPY pulling back just a little bit, nothing too crazy. So right now, it is ATER, guys. ATER is the number one stock that I'm focused on at this point in time. So ATER has room to 16, guys, and then 16.67, 18, and then 19 bucks here on ATER. And there's my stop out on AEMD. Very, very unfortunate. Looking great out of the gate. Again, 3 separate reasons to get involved. I would take that trade again if I saw it. It just nasty rug pull that wasn't really expecting to see it like that. Had the potential, had the volume, was looking good, and then out of nowhere, POAI! So, small little stop out there over on AEMD, and I guarantee it'll start ripping and running now. Right when it comes down and takes my order out, now it's going to start ripping and running. Watch it. Watch it happen. Yeah, I still have my swing on SOFI, guys. I still have my swing trade there on SOFI. Those were expiring this week on SOFI. Let's go check those out and see how those options are doing. This one right now is up about 7%. Not a bad little day on SOFI. How are those doing? 16% right now on SOFI from that swing trade I had from, last week on SOFI. I have a $16 target. And I have a $17 call option. So right now, the way SOFI is looking, maybe we get some nice action to fill that gap up towards around 17. And I have a trade that I thought was going to expire workless. Now maybe turn into a decent little trade. So good stuff. Good timing on the expiration. We're starting to see SOFI get some nice activity towards it. Let's see if SOFI can get up to that $17 level. Again, my options expire this Friday. So good timing. Thank you, SOFI. You wait until the last moment, but thank you. So a lot of stocks taking some heat this morning. I got SDC trying to get some action, and then POAI getting some wreck to the downside. ATER, still looking good. All right, now I'm going to watch ONTX. Right now, ONTX over that 564 level looks good. So ONTX over that 564 does look good. You got WIMI, another back burner play that we had. WIMI was the earnings, if I'm not mistaken. So WIMI right now, trying to get some hype towards it. Again, this one has room to 5 and then room to $6 there on WIMI. Nothing's happening right now with POAI. Like I said, watch AEMD just take me out and then start ripping to the upside. Got me stopped out to the penny there, and then it started. That happened yesterday, too. I got stopped out to, like, the penny, and then it ripped and ran. But that was a good stop. That was the right placement for that stop on AEMD, but now it's trying to give it another go here. So right now, nothing really standing out to me, right? The only thing that stood out to me was AEMD for those 3 separate reasons, guys. That's why I jumped into that trade, looking for that pop over 5 for that nice little leg on up on AEMD. Nothing really happened there. But right now, MRIN, is there any reason to really get involved with MRIN right now at this level? No. We have support down towards around 950 there on MRIN. So right now, not touching MRIN. Support still at $9.50. AEMD still looks okay above 470. This one could still definitely get some action towards it. Nothing with POAI. WIMI is moving on up. ATER is a little choppy out of the gate. SDC selling off out of the gates. You know, SOFI still looks good to fill that gap today up towards around 17. Nothing right now on SAVA. Definitely nothing right now on LCID. But here's SFIX team. SFIX does have room to like $44, right? SFIX has some room to 44. Yeah, LPTX hitting pretty much every target that we had from yesterday, guys. So LPTX, your next big target is $4, right? Your next big target here is going to be right around $4. They're on LPTX. That was another back burner trade that we were watching. CRVS was another one. HLBZ above 25, lost 25, no longer looking at that. NNVC, nothing happening. RWLK right now, nothing happening. So right now, we're only about 13 minutes into the market, right? 13 minutes in. And right now, it's still just sitting back and identifying what stock has the best opportunity. Is there a reason to get involved with MRIN here? Nope. Any reason to get involved with AEMD right here? I'm not going to. After that first little rug pull there, I'm definitely not looking to jump in on AEMD until it proves itself. And once it's proven itself that buyers are in control, that it is going to move higher, maybe we have an opportunity there on AEMD. Dennis. Yeah, Dennis. You know, Webull, great for stocks, great for options. You can actually buy crypto on Webull as well. So Webull wouldn't be a bad one, Dennis. So again, we do have room on LPTX up towards around that $4 level. That's going to be a pretty key level of resistance. Right around this 350. 350 is a good level of support here in LPTX. Now, if LPTX ever breaks above 4, we have room to 493. So right now, LPTX is definitely something that we should be keeping on high watch right now. Above that 347 level, we do have room to 4, and we do have some room up towards around $5 here on LPTX. Nice, steady grind right here out of the gate. Let's see if we can have this pull on back down towards around that 350-ish level, 348 level, for a possible little entry to get something going there on LPTX. Oh, you leaving? Hey, Chunk. What's up? Oh, I love you. Have a good day. Daycare?
That's you, Dad.
That is me, yeah.
Yeah, trampoline.
Yes, trampoline. Yes. Have a good day,
Yeah,
okay?
like me.
Like you, yes.
Yeah, you hurt.
Oh, I'm sorry. You're right, I did. I tripped you on accident. I know, but it's been 2 freaking months. So we got SOFI making new high a day, guys. SOFI making a new high a day. This one's still ripping and running, looking good. Currently up 30%. And I still think SOFI has some good opportunity up towards around that gap fill at 1691. So I'm looking to see how long I'm going to hold this one and see if we get up towards around that 1691 there on SOFI, guys, right? That's filling that gap right around 1691. Even if it breaks that gap fill level, you have that 200 SMA at 1740. So either way, we have a couple overhead targets right around 17 bucks where I'm looking to take profit there on SOFI. See, I'm not liking the market conditions right off the bat. You know, we have some nice action here, right? Out of a flag-like consolidation, we have the volume and then rug pull, right? AEMD, we had the volume out of the gate. Big rug pull, right? So I'm kind of sitting back the first, you know, another probably 10, 15 minutes, guys, looking to see if the market is a lot of rug pulling, right? Is AEMD actually going to start moving on up? Is it going to be consistent? If so, let's attack. But the last thing I want to do is try and jump back in on this and see a rug pull like we just saw with ONTX. A little bit of a rug pull. We saw that early right out of the gate with AEMD, right? Nice, good setup. Couple key levels. Boom. Just completely got destroyed on down. You know, MRIN, this one's selling on off. AEMD, still going to wait and let the stock prove itself before I jump on in on this. You know, WIMI has a lot of room to find, guys. I'm still just trying to gauge where the pullback entry would be for a possible entry on WIMI. I'm not buying at 450. You know, if the stock does pull back, though, maybe an entry somewhere around like 430 wouldn't be a bad little entry there on WIMI. And again, LPTX, I'm looking for a possible entry on LPTX, as I think LPTX has a lot of good potential as well. So let's see, LPTX, maybe back down towards around like that 350 to 355 for a nice little pullback entry. For the next leg up towards around $4, and if it ever breaks 4, I mean, we could see LPTX hitting $5. I think SOFI is going to break high a day here, guys. SOFI has that high a day break look to it. So SOFI breaking high a day. I think we start to see some good action up towards around that $17 level. It has that high a day break look to it. So let's see. I think we get a high a day break. SAVA is down at that 200 SMA, guys. SAVA is down at that 200 SMA. So again, that was like 54.19, which is like 54.60. Definitely look to see a little bit of a reversal, maybe a little bit of a bounce here on SAVA right off that level. Have a big downtrend as well, guys, right? Big downtrend right into this level of support. As long as the 200 simple moving average holds up on SAVA team, right? And we break this downtrend, I think we start to see some action here on SAVA, back up towards around 58.35. You're still talking $4 to the upside with $1 of risk on SAVA. So from a risk to reward standpoint, it looks good, right? As long as we hold the 200 SMA and break the downtrend, you have $3 to $4 to the upside with about $1 of risk there on SAVA. Quick little new high a day there on SOFI. Let's see if this one can continue to squeeze to the upside, guys, over on SOFI. How's MRIN looking? MRIN still giving a lot back. Still giving a lot back. And now AEMD starts to get some attention towards it. I knew it. I knew it. Put my stops right below these lows, and it came down to the freaking penny and got me. I had a 468 stop to the penny. Scupow! I'm like, you son of a... But anyway, guys, we do have AEMD now getting some nice attention towards it. We have our pullback level right around 508. So again, 508, 509 pullback on AEMD. Your next target would be up towards around 537, 550. And then we could really see AEMD start taking on off up towards around $6 here on AEMD. So I'm definitely watching AEMD right now. High watch, guys, for that possible pullback. into the 508, 509 level for the next leg up. Again, I'm watching LPTX around 355. I like LPTX. I think it has good potential. I like AEMD if it holds above 508. That one has some good potential as well. So those are probably the top two that I'm liking the most right now, guys, is going to be LPTX above that 355. Again, LPTX right above that 355 level, maybe breaking the short-term downtrend for the next leg up. You know, LPTX definitely has some good opportunity and some good potential. So it's really between LPTX, WIMI, and then AEMD. But you know what? I'm going to focus here on LPTX. I'm going to focus here on LPTX. I'm going to give LPTX a go. Yo, ATR is just a little too choppy for me. Nice big rip to the upside, on back down, right? Ripping to the upside, back on down. Right now, it's just sideways, right? Just a little sideways right now on ATER. So, need to find some more consistency with ATER. But the only thing that you really have right now at this point in time here intraday, guys, is this slide uptrend on ATER, right? You got the slide uptrend as support here on ATER with flat resistance. What kind of formation could that be? Right? Possibly an ascending triangle breakout formation on ATER, building higher lows with flat resistance, looking for the break over 1550. You have room to 16. You have room to 1667. Stops right now would be underneath the trend line. If ATER cracks the trend line to the downside, that's when you would want to get out of ATER. But you do have a nice little ascending triangle formation starting to form here on ATER. Again, higher lows with flat resistance, looking to get tighter and tighter and tighter. This is an 80-20 setup. We could definitely see it break and squeeze over that 1550 for the leg up to 16, for the leg up to 1667. I'm taking POAI off watch. Taking POAI off the watch list. AEMD still getting some great action towards it, guys. Pretty much hitting all of those targets now. You got that 537 and then 550 there on AEMD. Yeah, I said right when it stops me out, watch it start ripping. Right when it stops me out, I was like, watch it start ripping to the upside, right? I mean, it was a good trade right out of the gate. Came down, got me to the penny on the stop out, and then started ripping to the upside. That would have been a damn good trade. But hey, it is what it is, right? Every now and then shit like this happens. It happens, right? So again, take the stop out. It didn't have to hold 470. It could have came down to $4. I could have taken a stupid loss on the trade. It was the best thing to go ahead and honor the stop loss, get out of the trade, and simply move on. All right, and just move on. MRIN is just fading and falling, guys. Fading and falling. That's it. Right now, nothing with MRIN. AEMD already really hit our targets, guys. Now, what you're looking for next is a simple break over 550 high day, right? Pre-market highs, breaking over 550. You have room to 6, and then you have room to 625. Very simple. Support right now is 508, right? Support right now on AEMD is back down at 508. We just bounced off that level and just had a nice little pop. Looking for the break over 550, guys. Breaking 550, you have room to $6 there on AEMD. ONTX, not looking good right now, guys. ATER, ascending triangle breakout formation, right? An ascending triangle breakout formation, all that is where a stock has flat resistance and it's building higher lows, getting tighter and tighter and tighter and tighter before it makes a decision. Typically, 80% of the time, these stocks break to the upside and continue the uptrend. Stops would be right below that level of support, which is our trend line, right? So again, ATER starting to form a little bit of an ascending triangle breakout formation. Again, 80-20 setup that it breaks to the upside and it continues its uptrend towards around 16 and then 1667. They're on ATER. ONTX right now giving a lot back. WIMI is fighting to hold above that 430 support. Slight downtrend as well. So if it breaks the downtrend off support, you can see WIMI back up towards around 458. Oh yeah, I know you like TA, but one strategy is when Alpha gets stopped out, you just go buy. When I get stopped out, you buy. When I take profits, you buy, right? You know what I'm going to do, guys? I'm going to let someone just take control of my account and you can do it for me. You guys suck. You guys are funny. SFIX forming a little bit of a head and shoulders here. LCID. Trying to get some action back to the upside, but it's just a little bit of a bounce, right? It's retracing. I think LCID is going to continue its downtrend. I don't trust LCID right now. SAVA has to break this downtrend, guys. We're right around that 200 SMA, right? If you look at the daily chart, you're right around that 200 SMA with bottom support off yesterday's highs right around 52.95. So really just looking to see these levels hold on up. SAVA breaking its downtrend here. Again, you have room to $58 there on SAVA. And then SOFI, if this one's going to continue higher, this one has support at $16.10 there on SOFI. 16.10 support on SOFI. Oof. Man, a lot of rug pulls in the market, guys. A lot of just nasty price action. A lot of nasty price action. ATER just completely cracking. ONTX cracking, fading, and falling. WIMI really struggling to hold on up. AEMD losing momentum, right? It's losing some momentum here right up into those pre-market highs. Probably see a bigger, stronger pullback coming on up soon. And then MRIN just not even looking back up. It's just looking down and it's staying down. MRIN has its head down and she's just fading and falling right now. So right now, I just have LPTX. I'm just looking to see if LPTX holds above that level of support and continues higher today, guys. That's it. LPTX, 500 shares at 358. Looking at the rest of the market, though. Rug pull, right? Fading and falling. Not really holding on up. Losing momentum, right? Fading and falling. LPTX is the one stock that still looks like it has good opportunity, but seeing the market conditions, right? I wouldn't be surprised if LPTX just doesn't hold up, right? It just starts fading and falling on LPTX. So we'll see. Right now, market's kind of choppy, guys. Market definitely is choppy. MRIN just fading and falling. AEMD, once again, losing some momentum. Out of the gate, little chop. Had some nice action, though, above that 470. But again, right now, it's losing some momentum. WIMI is now starting to fade and fall. Definitely not able to hold up its levels of support. ONTX, same thing. Was looking to try and get that break on up to 630, 650. Just struggling right now. ATER cracking its uptrend, had great potential for a break. Right now, this one's struggling a little bit as well. And LPTX, it's struggling now as well too, guys. So right now, not really a fan of too much. You know, my stop on LPTX is like 348. Or I'm not 348, 345 on LPTX, which is basically below that first spiking high, right around that first pullback, and the VWAP as well, guys. Cody over on YouTube is like, hey Josh, where's your stop loss on LPTX so I can be like a penny below yours? So I don't get stopped out of the trade. So I can make some money like AEMD. Well, my stop right now is going to be like 342 to 343. 342 to 333. It had great potential, had the double bottom, it had the volume move in, but again, the market's just not holding up, guys. A point blank period, right? Decent setups, breaking the downtrend off the prior high. Was in an uptrend. The trend's your friend. Trade with the trend, right? The volume was there. Everything was there. It's just the market's struggling right now, guys. That's point blank period. The market's just not really holding on up. Everybody's like, so if LPTX stops you out, is that a good entry, Josh? Oh man, guys are cracking me up right now. You guys are cracking me up. So, okay, so 335 is a good buy, Josh? Yeah. Oh, man. So right now, we'll see what LPTX does. It stops me out, it stops me out. Yeah, it's pretty unfortunate because I see a lot of good stocks that I'd be shorting the crap out of right now. Right? I'd be short, but I'm kind of like, I'm stuck going long, right? But I see a lot of shakiness in the market. I would be looking for more shorts in this type of market, guys. But again, with a cash account, there's no shorting, right? And a lot of these stocks I'm not trading options on. It's unfortunate because there's a lot of stocks that I would most likely be shorting the crap out of right now. I'd be looking to try and grab some MRIN shorts off the downtrend. You know, I'd be looking for an ATER short, right? Big crack, consolidation, a little bit of a bearish flag, right back into the VWAP, into the 9 EMA. I would be shorting ATER. You know, I would have shorted ONTX off the 9 EMA rejection. I see a lot of setups that I definitely would have taken for a short. Oh, I know. It's all love. It's all love. We're having some fun right now. You got Josh over here. Can't make a damn good winning trade. It's like every single setup was damn near great, right? I'm not upset with the entries. I'm not upset with the red day at all. Like, it's not like I overtraded where I'd taken too big of a loss or I jumped the gun, right? I was patient on my trades. I identified the setups, multiple separate reasons to take a trade, good risk to reward. So again, I'm not upset with the trades. It's just the trades aren't working right now. The market is definitely bearish. The market definitely is a shorter's market right now. I mean, I can't tell you how many stocks that I see that, you know, I'd be trying to grab a short on. But yeah, you know, it is what it is. So just like, come on, market, shape back up a little bit. Let's get some wieners. Let's get some winners. You know, AEMD was a good one. I still was okay with LPTX, but right now it's definitely not looking good, guys. I'll probably get stopped out of LPTX. And I'll have like enough capital for maybe like one more trade. And that's it, guys. I'll have enough capital for maybe like one more trade. You gotta love small account challenges because guess what? They are challenges, guys. See, look, I would have shorted the crap out of ATR. I was even telling you, right? Bearish flag, rejection off the 9 EMA, rejection off the VWAP, right around 15 bucks. I would have shorted the crap out of ATR. Look at that big 50-cent drop. It's like, I want my big account back, baby. I want my main account back. I want to be able to short these stocks. Mexoid says, new strategy. Josh's stop losses or entries. Yeah. You guys are funny. Hey, we all go on red streaks, guys. Let's be real. We all go on red streaks. There is no trader out there that is green 100% of the time at the end of the day. So we all go on red streaks. I'm having one of them. I blame it on the distractions, right? I can't blame it on the market. I blame it on me. I have a lot of, distractions with the move, with the close, with everything that's going on here over the next couple of weeks. So definitely a lot of distractions. The markets is definitely... there's opportunity, right? Let's be real. There is opportunity in the market, but I see more short opportunities, right? Definitely today, I'm definitely those first couple of red trades. I'd definitely be leaning more to the short side and looking to make profit to the short side. But again, right now it's no shorting for me. And I'm going to have to stop out here on LPTX. Boom, boom. I'm out. Ha, ha.
Don't think about it too much, too much, too much, too much. There's no need for us to rush it through. Don't think about it too much, too much, too much, too much. This is more than just a new lust for you.
Yeah, don't think about it too much. Don't think about it. Hey guys, losses happen. Stops happen. You have red days. You have red weeks. I mean, I've had red months, guys. That's a part of trading. But the biggest thing is managing your risk, right? I know what my daily max loss amount is. I know that I'm not over trading. I know I'm not taking too big of position sizing. I know that I'm just having a red couple days, a red week, right? It happens. Don't think about it too much, because guess what, guys? At the end of the day, you have a proven strategy that works. You know that you have a consistent 70, 80% win rate. Again, there's 20% of the time, 30% of the time, guys, that you're going to have red trades, and you don't know when those red trades are going to come. They come, 50-50, right? You can have all those red trades back to back to back to back to back, right? Red streaks, right? So again, it happens. I mean, the market is going to, everything's random. Everything's random. Your wins and losses on average are all random. You don't know in what order they're going to come. And right now, I'm having my red losses. It's that simple. But I know that the green days are just right around the corner, right? And I have to keep it simple. Keep doing what I'm doing. Identifying the setups, taking the setups, managing my risk, not over positioning myself, just keeping it consistent. And I know that at the end of the day, I will be profitable. But right now, I'm just having my red days back to back to back. That's it. Rob, not gonna lie, hats off to you, bro. It would be hard to trade and commentate multiple stocks like you do. Thanks for the sacrifice. Absolutely, guys. Absolutely. I do this because I love doing it. And I told you guys a million times, right, that, if it was just me, myself, and I trading, it'd just be game over, right? But again, why do I make those sacrifices? Because again, I was a new trader one time. I was a new trader. Right? And I didn't have the guidance, and I didn't have the leadership, and I didn't have the help, and I struggled. So what can I do to help new traders? I can be there to help them, right? If it means a small sacrifice out of what I make from my trading, right? Just doing it on my own, but I love helping people, and I love seeing people succeed at the end of the day. That's it. I love helping you guys. I love seeing you guys be successful. That fires me up more than my own profits. Like, I walk out of my office every single day so happy and fired up. My wife goes, "How was your day?" "It was amazing." "What did you make?" "I lost money." "Why are you so happy?" "Because my team made money," right? Everybody in chat made money. They had a successful day. That's what fires me up. And it's crazy because, I used to come out of my office, 3 years ago, I lost $100. Now it's I don't even care because my team is fucking making money. They are successful. I love it. Absolutely love it. So right now, guys, LPTX had good potential. Right now, LPTX moving on back down. Right now, not a whole lot of opportunity there. ATR is just very choppy right now, guys. ONTX coming on back down, not holding on up. WIMI has some opportunity above 430, guys. So again, we just broke the downtrend, right? We're starting to reverse from downtrend to uptrend. We need to see the higher low, and we need to start to see some buying volume move back in. We do have room back up into the 450s on WIMI. Skylar goes, Josh, you deserve those PTO days. Pay time off would be forget the new traders like myself and go trade alone. I vote for 7. 7 of the year. Well, okay, I'll tell you what. 7 days out of the year when I'm here, I'm not going to answer any questions. You guys are just going to watch me trade for the day. How about that? Like, I'll still be here in chat. I'll still stream. But I will literally not be watching the comments or the chat. And I'll just trade. Those are my PTOs. Yo, Ed, you hit it on the head. You hit it on the head. You know, I got a lot in my head moving, packing, agents, calling you, up the style. Gosh, yeah, it's crazy. It's crazy. Yeah, give me your work schedule, Catherine. So, you know, I can make sure that those days off are around your schedule so you're not going to be missing that commentary. So again, WIMI off the pullback into the 430s, guys. Had that potential to 458. I'm gonna be honest with you now. I'm like hesitating to pull the trigger. Simply put, I'm just hesitating to pull the trigger. 3 good reasons to take AEMD. Takes me out to the penny. It is what it is, right? LPTX, another good setup that had the volume move in. It had the potential. It tried, and then nothing. So I'm just like, I don't really trust myself in the market. That's it. Like, again, today, I know like I would be thriving to the short side, right? Thriving to the short side, or, you know, obviously a margin account to where if I take a trade and I don't like it, I get out quick. If it sets back up, I can jump back in, right? Make a couple bucks. Get in a trade, don't like it, get out. Sets back up, I can get back in, right? I can be in and out 2-3 times before I nail that trade. But again, with that small account, guys, it's a challenge. It's a challenge. Yeah, it's called a small account challenge for a reason. I never did good with small accounts, but I consistently grew them. And that's what it's all about, is the consistency, right? The small account challenge isn't about making $1 million from 1,000. The small account challenge is about figuring out your edge, right? Being consistent, being disciplined, right? All of these traits that, you know, you have to have, right? Those skills you have to be successful. I never did great with substantially growing my small accounts, but I did great with managing my small account and seeing consistent results. And so when I went to a main account, nothing held me back, right? Cut my losses, patience, discipline, consistent base hit trades. I was just able to get in and out more fluently and a little bit easier with that margin account and take short. So again, you know, it's all about that consistency, guys. At the end of the day, it's all about consistency. And those are the key takeaways, you know, from the small account. Yeah, AEMD, definitely one of the top stocks that we should be watching right now, guys. How's SOFI doing? SOFI came down to the 610, lost it momentarily, but pushing right back on up. So SOFI, I still think has some good potential to hit that 17. SAVA is just struggling. It's not getting that break. LCID, again, that was just that retracement for the next leg down. LCID. The SPY having a nice little green day, getting some action towards it right now. That was a good time to get out. Wade, 542, right at resistance. You saw it. Boom, 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 boom. That was okay to get out. I would have gotten out too, Wade. There's nothing wrong with green, nothing wrong with profits. I saw resistance. I would have gotten out as well. And again, if we saw that break, maybe I'd jump back in for a quick little scalp. So I have enough capital for one more trade. I got about $2,500 for a trade, and I'm just looking for, you know, that setup that could produce 10%, right? You know, ideally, I'd want to find a good setup where I could get 10+% return and not really have a lot of risk, maybe 2-3% risk. Because, you know, a $2,500 investment, I bang out a quick little 10% trade on something that provides me with a 10% opportunity. That takes me out of the red, puts me in the green. So again, I will not trade unless I see a solid A+ setup that has potential to get me 10% return. And right now, the only, see again, another rug pull. WIMI came down, bounced, rug freaking pull. I mean, the market definitely is a little unpredictable today, guys. You know, you have some good volume moving in. You definitely have some opportunity, but sellers are definitely in control. But the only stock right now where buyers are definitely in control, AEMD, this is where our focus is right now, is on AEMD. This stock has room to $5.97, like we were talking about this morning. Has room to $6.25, and then we have so much room to the upside here on AEMD. We can definitely see the stock up towards like $8.75, guys. Over $8.75, then $10. So AEMD is my number one watch at this point in time. I'm waiting for the stock to pull back to $5.50, up to the trend line as well. So back down off those prior level of resistance before we broke out, as well as this trend line, I would be looking to get involved here on AEMD. For that possible rip over that 625 to see how high this bad boy could go. So again, back down towards around 543. Definitely not a bad little entry on AEMD. You know, you can grab 50 cents out of it from 550 back up to 6 if we get that move. Stops, 25 cents. Would that be too tight? No, because it would be a stop under the trend line if we crack the trend line. And as you guys can see, I'm currently down on the day, 147.95. Again, I'm just in a red streak right now, having a nice little red streak since last week. MRIN still fading and falling. WIMI, I wouldn't trade it. Even if it was a main account, I wouldn't trade it, especially after seeing that nice pop and then how it just flushed on out. I'd be concerned that you'd see it try and move back up and flush on out again. But right now, you know, the number one stock to watch is AEMD, guys. AEMD back down towards around 540. That puts you right around the trend line as well. That's where I would like to get involved. They're on AEMD. There's nothing right now with ATER, guys. Nothing with ATR at this point in time. Nothing with ONTX at this point in time. WIMI, I simply don't trust it. AEMD, this is the stock that I want to wait for the setup, guys. All right, so I'm waiting here on AEMD back down towards around the 543 level. Prior resistance, new support, also the breakout level, also the uptrend. We do have a few separate reasons why that would be a decent little entry on AEMD for that continuation higher, guys. All right, so give me like a minute. I drank way too much water today. I'm gonna use the restroom, and I'll be right back with you guys. All right, we're back, ladies and gentlemen. Did I miss anything? I don't think so. So again, right now, the number one stock that I am watching, and obviously the number one stock of the day, trading 47 million shares, high relative volume, up 50%. AEM to the D, back down towards around that 543, and the reason for that is it was pre-market resistance, it was intraday resistance, and it was our breakout point. One reason that old resistance can turn back into good support. Number two, we have the uptrend here as well. So again, you have two levels of very good support, and you have the VWAP nearby. And I'm pretty sure if you run a fib off this level, it puts you right at a fib level as well, which it does. So we have a couple separate reasons why the 543 to 550 would be a good level for the pullback for the next leg on up towards around $6 here on AEMD. Stops would be cracking the VWAP. Stops would be cracking the trend line and falling below that level of support. Again, here on AEMD, guys. So that's what I'm looking at, why I'm looking at it. And right now it's a game of patience, waiting for the stock to give me a proper setup so I can take advantage of it. We'll just keep MRIN on watch for a possible reversal. So I think it's still worth watching MRIN just to see if it does possibly start to reverse here. Intraday above like $8.50. So again, I know it's in a really nasty downtrend, but maybe we start to see it reverse out of its downtrend into a slight uptrend, and maybe we can capitalize on MRIN if it does start grinding back to the upside here. So still keeping that one on watch, but right now it's AEMD coming on up. So AEMD. One thing we can do as well on AEMD is throw a little bit of a downtrend here. Coming to the uptrend, breaking the downtrend off that level of support. I'll go long on it because, again, there's a few separate reasons there on AEMD to get involved around that level. So let's see if it sets on up for us. And you do have SOFI in a little bit of this wedge formation, this symmetrical triangle formation, downtrend resistance, uptrend support. Assuming SOFI can hold the uptrend support and break this downtrend resistance, we do have some great room, again, to $16.90. Looking to see if MRIN forms a reversal. And right now looking for AEMD down at like $5.43 for the next possible leg up. Yes, I can trade OTC if I wanted to. I do not trade OTC stocks though. So I do not personally trade OTC, but if I wanted to, I could. And AEMD is already starting to pop that trend line. A little premature in my opinion. Just a little premature in my opinion. SOFI still looks good. You know, if AEMD starts to really squeeze here and starts moving, we'll wait for another setup. I wanted it down towards around 543. I wasn't going to take it any higher than that 543, 544. So right now I don't have a position on AEMD, but it's starting to pop back up here a little bit. I'm going to look for a possible reversal here on MRIN. I'm just going to look for a possible reversal here on MRIN. And so what I'd like to see is a little something like this. This is what I'd like to see on MRIN for me to like it, for me to take it, right? Obviously, it's selling off pretty aggressively. Bounces off support from pre-market. Loses support momentarily. Back above. If we see this come back down and hold that 863 level, what we could do is we can connect a little bit of a neckline here, right? And if we see that stock hold that level and start to break that neckline, that would definitely signal a reversal, and we can grab maybe $1 a share out of MRIN. So that's what I'm looking for there on MRIN, is for this stock to hold above that prior low as support, break this short-term trend line, which is our neckline, and then we could see this definitely gain some volume and start pushing back to the upside. Another thing too is we have divergence, right? Stocks making lower lows, RSI's making higher lows, right? That's a sign that buying momentum is starting to return, and we could definitely see this reverse. So there's a couple separate reasons on MRIN as well, as far as why I want to get involved with MRIN. MRIN had the good news as well, team. MRIN had great news, right? Just some profit taking out of the gate. Looking to see if this reverses and to see if buyers can step back in and take control of MRIN. Keep WIMI on watch, guys. High watch WIMI for a possible cup and handle formation. WIMI for the possible cup and handle over 460, team. Has room to $5. WIMI right now. Keep this one on high watch. Still watch AEMD off this trend line. And MRIN for the possible reversal here, guys. AEMD is, AEMD. Nice little rug pull there, guys. Ugh. Hopefully it stays above that 543. If AEMD can stay above 543, it still has potential, but that's a pretty nasty candle right there, guys. Pretty nasty candle. We may see a mob shift, right? A majority of buyers shifting from AEMD to another stock, right? AEMD had the attention. If this one starts cracking and selling on off, you may see buyers run from AEMD on over to MRIN. You may see them shift on over to WIMI for that possible cup and handle. If AEMD continues to crack, continues to fade, you may see a shift of buyers from AEMD to another stock. ZEV has been something on watch for quite some time. ZEV has been a stock that we've had on watch for the past couple of weeks, guys. So ZEV right now does have potential to get to $10. Right, that's about it. $10 is your potential there on ZEV. It came back down, held that level of supports right around that 20 EMA. We're definitely starting to see it get a little bit of action towards it. And again, 10 to 1023 is going to be your level of resistance. Now we got AEMD starting to crack that level. Let's see if we get a little bit of a shift. Let's see if we see that shift into another top stock, right? MRIN or WIMI. Nice cup and handle on WIMI. We're starting to see traders go from AEMD, and they're moving on into WIMI for that cup and handle breakout formation, guys. So WIMI, that one has room to 5. Look at it go, guys. Nice cup and handle. Look at it go. Good stuff. Still looking for the MRIN reversal. Still looking to see if we get that MRIN reversal. It has very good news. It's a low flow stock, has great volume. You just think of the psychology of it. Guys, this stock went from around, what, $5 yesterday? Opened up at 10. Of course, there's going to be profit taking. But again, we are coming back down into that post-market resistance, intraday support right now. Looking for a reversal off that level to see if we can get some buyers to move back in to MRIN. Right, just looking to see if we can get some buyers to move back into MRIN. WIMI, did it get 5? I got 490 though. Hit 490. Pretty nice break there though. About 40 cents to the upside. Not too shabby. So right now it is 10:34 in the market. Mr. Josh, that's me. Having a rough day, having a rough week, but hey, it's all good, baby. Because you know what? I know at the end of the day, at the end of the year, my edge works. My strategies work. They've been proven to work. I've been doing it consistently for years. As Mark Douglas would say, right? You guys ever listen to Mark Douglas? You ever read the book, Trading in the Zone? What does he say? Once you've identified an edge, once you have a strategy and a technique and a skill set that works consistently 70 to 80% of the time, just because it's not working in current market conditions, you do not change your edge. You do not change your strategy. The second you start veering away from something that works, the second you see yourself in more and more and more losses, and that strategy and that edge would yield consistent results. The last thing you do is when you're on a red streak is start changing what's worked in the past, right? The last thing I'm going to do is go back to the drawing table, right? The last thing I'm going to do is go back to the drawing board and start doing new strategies and new edges. No, because I know at the end of the day, at the end of the year, my approach yields consistent results. It's just a part of trading. That's why they're 70% win rates. That's why it's 80% win rates. It's never 100% because you do have that 20 to 30% of the time to where you will lose, where your edge doesn't work. It's just the market conditions. The market's not, healthy enough for your approach to work. But as long as you have a proven skill set, right? That proven edge, that proven strategy that you've tested, you've back tested over years, and you know that it provides consistent results, you just have to stick to it. That's it. You have to stick to it. So when the market's not healthy and your edge isn't working as consistent, like for me, for example, what's one thing that I can do? I can scale back on my size. Maybe I'm not as aggressive. Maybe I'm a little bit more moderate with how much size I'm going with to where I'm not losing 2 to 3% a day, right? 2 to 3%. If I am on a red streak, maybe I'm losing 1%, right? I'm dialing my size back. As I notice the market returning to healthy, and I notice my edge is now working again, and I'm seeing those consistent results, then I can start scaling back up in my size, right? So that's the only thing that I would ever do if the market's not healthy and my edge just isn't working as consistent as it normally does. I'm not going to change my approach. I'm not going to start tweaking my edge because my edge is my edge for a reason. The only thing that I will do is scale back on my size to reduce my loss when the market isn't as healthy for my edge to work. All right, guys. So the last thing you should do is if you have a proven skill set, a proven edge that's been back tested and it yields consistent results, the last thing that you guys should be doing is changing that edge if you find yourself in a little bit of a losing streak, a red streak like me. All right. Now, Mark Douglas is absolutely amazing. We were playing Mark Douglas, Friday inside the chat, I think. I think it was Friday or Monday inside the chat. We had Mark up on the stream for you guys. Just some good motivational stuff, kind of just changing that mindset a little bit. Right now, I'm in on MRIN. I told you guys I was building a position off the reversal. I have an 888 cost basis. If we put in this higher high over 905, 904, if we put in the higher high and confirm the reversal, my stops will be underneath this low. I will have an 869 stop, an 868 stop underneath this low if we confirm the reversal over the 905 level. Okay, team? So that's how I'm playing MRIN right now. I have 250 shares. And if we get the 905 reversal, my stops will be right around 869. Okay? That's how I'm trading MRIN right now. That's the proper stop off the reversal. We want to see it continue its nice little uptrend. We have some profit taking potential right around 930. We can definitely take some profits around the VWAP at 970 and then possibly back up to 10, 1025, and then over 1050 if it does completely reverse and goes green on the day. So let's see if MRIN can get that reversal. And reversal. Nice. So stops right now are $8.69. Stops right now are $8.69, guys. On my main account, I'd be locking in profits. Let's be honest. If I was on my main account, my large account, that would have been probably 1,000 share trade, 1250. I would definitely be locking in profits right now. 100%, right? But right now, I got to be patient and take these good setups as long as I can take them to capitalize on the entire move. Like right now, I'm up 65 bucks. On my main account, it'd be 4x. It'd be maybe like a $300 trade. You best believe I'd be locking in those profits. Small account, why am I not? I have to be patient and actually ride these trades as long as I can. Right? I know my entry. I know my stop. I know my targets. Right now, I'm just going to put my stop in the system at 869. But MRIN is very tempting to go ahead and lock in, profit. I'm not going to lie. It's a little tempting right now to lock in some cheddar. Because my approach with the small account is to identify these 80-20 key setups at the best levels to where I have the least amount of risk, right? The least amount of risk with a lot of upside potential. So again, my approach with my small account is identifying these really good, high probability setups, getting the trade with the least amount of risk, and being able to ride these trades, right, up until my targets or until I see a sign to get out, right? I cannot scalp on my small account, right? I cannot scalp. That would have been a scalp. In, out. 3 minutes, that would be considered a scalp, right? On the small account, I can't scalp because once I'm done, I'm done. Right? Once I'm done, I'm done. I need to wait and be patient with these trades because if I get out now, I can't get back in. Right? On my main account, I could go ahead and take that scalp, wait for the pullback, get back in, take the scalp, wait for the pullback, get back in. I can be in and out of this trade 3 times over 10 minutes, locking in $500 plus a profit. The small account, guys, that was just kind of my approach when I built my game plan for the small account is I cannot trade it like my main account all the time. Right? If it's a very volatile stock moving $2, $3 at a time, okay, fine, I'll scalp it. But on a stock like this, moving 10, 15 cents, 10, 15 cents, I have to look for those 80-20 setups. I have to be able to get that lowest entry and take it for the bigger move to the upside. It is a big change. It is a big change. It's a huge change, right? It's huge. I've been trading a big account for 3 years, right? It's a big change going from in and out, in and out, in and out, maybe 2, 3, 4 times a day to buy and just ride the trade. Buy and just ride the trade. That's not how I thrive as a trader, right? That's not my trading style. That's not my edge. That's not what works for me consistently. Me, I identify those entries. I take them for the quick moves on up. I identify the entries. I take them for a quick move on up. 30, 40 cents, 1,000 shares, 300, 400 bucks, done. That's my edge. That's what works for Joshy Poo over here, right? Not buying and holding because, again, rug pulls, right? Sellers coming in, manipulation, market maker price action. I like to just get in and out, in and out, in and out, in and out. That's my edge. That's my approach. That's my style. But on the small account, I built a plan, right? I strategized. How am I going to make consistent profits from the market with small amounts of money, right? With limited buying power on a cash account. I'm going to have to nail these really nice 80-20 setups, high probability setups, and ride them as long as I can and be okay with taking my stops. Right? Being okay with just getting stopped out if I get stopped out. And if the trade works in my favor and I get that big move, right? My wins, my gains will eat up those small little losses on the trades that say did not work. It's a huge change. It's definitely a psychological shift for sure. But it's okay because, again, you guys are working those small accounts too, and it's possible to get consistent results out of a small account. But the market hasn't really been a small account market. Let's be honest, right? In my honest opinion, my professional opinion, this market that we've been in, but it's not the opportunity that I would like to see for small accounts, right? September trading is definitely not the best month for trading most of the time. It's definitely been a harder month to lock in those really nice, big, small account profits. It's definitely not the right market conditions for a small account to thrive in, but there is opportunity. I mean, WIMI. I mean, look, cup and handle, it broke on out. POAI, right? But I'm looking for those nice, 10, 20% opportunity trades. And I saw MRIN off the reversal. I love buying the reversals. It has so much opportunity to the upside with such a low amount of risk if it doesn't work out. This was the trade that made more sense to me. Off support to resistance, right? We have a big window until we hit targets, until resistance. We didn't have as big of a window. Yes, it was a nice window, right? But I think MRIN has a better window of opportunity. And that, ladies and gentlemen, is why I'm thinking about going back to the main account, but still having that small account on standby. And if we see those 1 or 2 trades a day that are really good for the small account, we can take those together on a small account, right? But for the most part, I like to get back in the zone. I would like to get back in the zone, baby. But again, right now we're working with what we have. And right now we're looking for those great 80-20 setups. We're looking for those big time moves and MRIN. Let's really break it down. Phenomenal news on MRIN. Wouldn't you guys agree? Great news. Yes. Low float stock. It can definitely take on off. Trading a lot of volume, high relative volume, right? Again, think of the psychology of trading. The stock is up 80%, right? From close to open, it's up substantially. There is going to be profit taking, but the stock is pulling back down into a level of support and it's reversing intraday, and it was showing some divergence as well. So again, MRIN, the news, the technicals, the volume, the float is a good candidate to actually see this get some action back up to VWAP, back up to 10, back up to the open, maybe back up to those pre-market highs, right? Slow and steady. It's definitely got to happen in 2 minutes, but it definitely can happen. So I like the opportunity that MRIN has. I like the potential that it shows. And right now, I'm going to try and ride this trade as long as I can. But right now, I'm kind of tempted to lock in some profits if we don't break 925 here. 1, 2, we want to see a big clean break through 925. We got 1 leg, 2 leg. Usually that 3rd leg off a reversal is a pretty nice solid leg to the upside. Want to see some great volume. Want to see a clean break over 925. Maybe get another 30, 40 cents out of this up into the 950s, 960s. That's when I'll start locking in about, half my position here on MRIN. I'm going to give it a second. If we don't start to see it break 925, I may go ahead and lock in a little bit of profit now. Just to go ahead and secure something. My stop's underneath that following low, right? We got the higher low confirmed with the higher high. We have yet got a higher high over 925. So until we get a higher high over 925, my stop is still underneath that prior low of 870, right? But I'm very just tempted to get out. I'm tempted. I don't like it. I think it's going to curl on over, right? I think it has more odds of cracking 9 and moving lower than moving on up. So I'm thinking about just locking in my profits, guys. Going to give it a few more seconds to see if it can break over that 925 and get a higher high, so I could then bring my stops up to 895 and still be in the green on my stop out. I'm going to give it a few more moments here, a few more moments. It's still holding that 9 EMA. It's still above $9. You start to see it look weak, back below the 9 EMA, starting to struggle around 9. I lock in a whopping 12 cents a share. Yeah, Catherine says, lock it in so it'll take off. That's the thing. I know once I lock it in, it'll take off. So I'm trying not to lock it in and let it take off. But for some reason, when I don't lock it in, the trades don't take off. When I lock it in, the trades do take off. I can't win. Can't win. So I'll tell you what. Right now, I'll go break even. It'll still probably take off, wouldn't it? I mean, it doesn't have any reason to... it still looks okay. You still have a slight uptrend. You're above that prior high. But it is tempting because green is green, guys. You know, green is green. And it is a big psychological shift going from big account to small account because I still trade with the same mindset of my big account. And right now it's locking the profits, Josh. I would have locked him up at 920, but it's like I want to be as patient as I can and trade a good setup. And this is a good setup. We had multiple separate reasons to get involved. And right now, it's still technically in an uptrend. A slight uptrend, technically speaking, it is. But again, this is what happens when Joshy Poo doesn't lock in his profits. But it's funny because when I do lock in those profits, right, the stocks rip. And that's another thing too, is my edge was really tailored around a larger account, right? My edge wasn't really tailored around a small account. You know, when I really started identifying my edge and what really works to generate that $500 a day consistent results, a lot of that was tailored around, you know, a larger account with being able to get in and get out pretty quickly. WIMI, guys, that was a solid cup and handle, and she is just going. She is going. AEMD still looking weak. MRIN still hasn't cracked down below. We'll see if it gets back above 9. If it doesn't get back above 9, I will be locking this up on MRIN. If we can't, over the next maybe 2-3 minutes, get back above $9, I will be locking it up on MRIN and taking what small, teeny, eeny, weeny, little bitty, itty profit there is. SOFI still looking good? Yeah, buddy. I still haven't sold those calls yet on SOFI. I'm still holding those calls. I still think SOFI has some good opportunity, guys. Right now, it's 30-ish% return on SOFI, so I'm riding those as long as I can over on SOFI. I'm out of MRIN. I don't like it. It looks bearish. I'm out. So right there, down 162 again, guys. Down 162, 1.6% of the account. So again, it's not 2-3%, nothing crazy. It's manageable, right? It's manageable. I haven't really risked more than probably a percent and a half over the last week or so of trading. So it's definitely manageable. Definitely tolerating the risk just fine. It's just a couple red days. So right now, we're gonna shut her down. Out of sight, out of mind. All right, so I'm out of MRIN. MRIN can go ahead and go POAI. Oh, you're good, Skylar. Great management. You didn't let those losses blow up. Nope. You got to stop out, right? Got to stop out. AEMD, I had to stop out under support. Got me to the penny. It ripped. Coulda, shoulda, woulda. It would have been a beautiful, nice trade all the way up to that $6 target, right? But again, it happens. MRIN, same thing. Good little trade. Should have locked in profit. But again, that's just not my plan that I built when really breaking down how we're going to, how I'm going to grow my small account. It's really about identifying the good setups and riding them as long as I can, right? And that was a good reversal. It still has great potential to the upside. But that being said, I just went ahead and walked away from it. Not getting out turns your smile upside down fast. Yeah. I've learned my lesson as a new trader, guys. Definitely learned my lesson. And the lesson is when I say I have a price that I'm stopping out, no matter what, I stop out. No matter what. What happened 2 weeks ago? Remember, I made a mistake 2 weeks ago. What was that mistake? I said I was going to stop out a certain price. I didn't. What happened? The trade continued to work against me, right? 80% of the time, when I say I should stop out, 80% of the time, the trade works out against me and it turns into a bigger loss. 20% of the time, you have trades like AEMD, right? To where if you would have just held a little bit longer and not honored your stop, it would have been a profitable trade. But if you have that mindset of, I'm not going to honor my stop because things could happen like AEMD, well, that's 20% of the time, guys. That's 20% of the freaking time. That's it. 20%. 80% of the time, you're going to wish you stopped out of that trade. Matthew, do you think what's happening in China is going to affect us? Yeah, absolutely. 100%. Evergrande, if they default on their payment that's due like today or tomorrow, that's definitely going to ripple through, you know, in my opinion, the worldwide economy. They hold, you know, half the world's Medicaid, retirement plans, you know, a lot of exposure here in the U.S. and across the world to that. If they default and they struggle, yeah, you'll definitely see that ripple through the probably the entire economy. So 100%. So we'll just have to keep our eyes on that news and what they're talking about and what the outcome is with that whole China stuff. And, you know, kind of just play it day by day by day. And as we get more information, we can kind of get an idea of, you know, where the markets could be headed to next. But I definitely think that would definitely affect us. Absolutely. Because like I said, they hold almost half of the world's Medicaid and retirement plans. So yeah, a little bit of a boom, boom, bang setup on AEMD, right? 1, 2, 3 points off a double bottom on AEMD. Looking to possibly break this downtrend, guys. That's a go-to setup. I like these setups. I'd be jumping in, placing stops underneath the low, waiting for that quick pop to 540, locking in profits, right? Nice little double bottom. Looking to break the downtrend for that possible leg back up over 543 to get AEMD going again. And then speaking of crypto, how is crypto looking today? I may want to start getting my feet wet again. I was scaling in Monday. Let's go ahead and look at crypto again and kind of gauge where it's at right now. Bitcoin USD. It's popping up a little bit. So I was getting in off that high, right? So right when it came down into that prior high right there, into the prior high right there was also a 50% retracement from this low here to that high. That was about a 50% retracement into those levels. I started my position there. If it cracks down below that 41K, down into, say, the 61.8 fib level, I'm going to start scaling in even more. Down into the, you know, the 35, 36 level, right? Right into that OTE zone off the fib that we talk about a lot. Definitely going to get even more aggressive. You know, if it were me, the fact that we didn't break on 0.4 here, I'd be a little cautious with the trade. I know, Pancake. I know. I don't want to talk about it. I know, buddy. I know. I'm not even looking at it right now. I see it. It's probably going to go to 950, 960. You know, like I said, I cut my loss, right? I cut it. So you guys can go ahead and go long. I wouldn't be surprised to see MRIN back over $10 today. But that's the beauty of, you know, a main account, right? Is I'm not liking it, I get out, right? I mean, or taking profit, right? Taking profit, coming back down, liking it, jumping back in, taking profit, right? I mean, I could have been in and out of this trade 2-3 times. And looking at it in hindsight, obviously I got in here, taking profit, would have probably tried to get in here, taking a quick scalp. You know, I could have definitely gotten in a few times here. And looking at it in hindsight and how my edge works and how I trade, I definitely see where I would have taken the trade, right? Little couple scalp. Yeah, absolutely, Catherine. 100%. She's like, thanks for getting out, Josh. Thanks for getting out. You are more than welcome. I hope she goes to the moon for you. But yeah, AEMD, sorry, where would your stops go? Underneath the low, right? The boom, boom, bang, wherever it puts in that double bottom, that's where your stops are at. So stops would have been 510. Stops would have been 510. Right now, it's up about, what, 20 cents a share, 1,000 shares, quick $200 scalp on MRIN, or I'm sorry, on AEMD. That's the boom, boom, bang. Absolutely love these setups. Definitely love these trades. Another trade that would have been, slightly profitable. Again, it's up about 20 to 25 cents a share right now from that 510 low. But you know what I think I'm going to do, guys? I think I've made my decision, assuming everybody in chat's okay with it, right? Because I'm here to work with you guys. I'm not here for me. I'm here for you guys. So I'm thinking about going back to my main account and having my small account off to the side, right? I'm just going to fund a separate Lightspeed account as my main account, and I'll have two accounts with Lightspeed, one small, one big, and I can just toggle between the two. When we come across a good small account setup, we'll go ahead and switch on over. We'll take it. But then for the most part, I'll have my live account up and we'll just have some fun. We'll make some good profits. Like we were doing the last 6 months. Skylar says, I would love to see that live account in action. My vote is yay. All right, we got a yay. If we get some nays, then I'll second guess it. But if we just get nothing but yays, let's go. What did he do? Oh, he went back to his main account as well, Dave? Because I know he was doing a little bit of a small account challenge as well, but the market really isn't thriving for small accounts right now. It's just really not. Why continue to beat yourself up left and right with, market conditions that are good for, scalping, in my opinion. You thought my large account was in lumber? It's invested right now. It is, but I can pull out of my personal and refund. I would do a small account whenever the opportunity is. I wouldn't really focus on a small account, say Monday, and the market not be thriving for a small account Monday. Let's say it thrives on Tuesday. I would just say that I'd have the small account on the back burner, and when we come across those small account trades during our days, then that's when we take it. Yeah, he also uses an offshore broker. He uses Capital Markets Elite Group. And again, he's got a structure with them to where he doesn't pay commissions and fees or a platform fee. The typical person with Capital Markets Elite Group, you will pay $150 a month plus $3 to $4 per trade, right? He's got a structure set up with him to where he doesn't play the platform, he doesn't pay commissions and fees, and he's not restricted to the PDT rule. And he gets 4-to-1 leverage, even though his account's not over their requirement for 4-to-1. So he's got some benefits with CMEG, with his small account, right? I like him. He's a good trader, but there are some things that are not really talked about. And again, it's the fact that he gets the 4-to-1 leverage, 6-to-1 leverage with a lower account. He's not paying commissions and fees. He's not paying for the platform. You're talking $200, $300, $400 a month, and you're not restricted to the PDT rule, right? Because it's a margin account with an offshore broker to where they're not regulated by the SEC. There is no PDT. So yeah, count me in. Give me a free platform to trade on with no commissions and fees. That's a margin account with $1,000. Oh, absolutely. I'd freaking turn it into 20 grand in 2 months, right? But again, there's definitely more than what meets the eye there. Woo! I like large fries too. I like large fries too. So he was paying commission and he didn't use leverage. Okay, well, if he didn't use leverage, that's amazing. If he was paying commissions, fantastic. But, there are benefits with using an offshore broker, right? Definitely a big world of difference. Give me a small account that's margin with no PDT. Oh, absolutely. It's going to be worlds of difference than using a small account that's cash and having to wait for the cash to settle, having to really be disciplined with 1 or 2 trades a day because that's all the buying power you have. So, but yeah, at the end of the day is, small accounts with an offshore broker. Oh, absolutely. You can definitely do phenomenal. But yeah, that is currently invested. That is currently invested. But I would just pull money out of my my pocket and refund it. And whenever I get my return back, then I just repay myself. Repay it. Yeah, exactly. This is a good small account setup, or this is not a small account setup. This is a scalp setup, quick in and out. Absolutely. Tom, you hate to buy and hold. I don't blame you. I do too. I don't like buying and holding, guys. That's not how I thrive in the market. Some traders are able to come in and scale in and scale out of their trades. They do good, right? Some people like to come in, buy these dips, right? Okay, I'm going to take 100 shares, 100 shares, 100 shares, 100 shares, scale, scale, scale. They make $500, right? That works for them. That's okay. We talk about that. We teach that, how you can buy the dips, bring your stops up, buy the dips, bring your stops up, and you can go in and scale in on a day trade and scale out of a day trade. Some traders do really, really well. Me, I jump in with 2,000 shares. The stock goes up 30 cents. I make $500-600 in 2 seconds, right? I don't want to sit here and trade for 2 hours to make $500. I'd rather look at the opportunity, identify the opportunity, get in, get out quick, and make the same amount of money in less time, substantially less time. I do not like buying and holding, especially penny stocks, guys. Especially penny stocks. I like to get in, get out, get in, get out, get in, get out. Again, my reason for that, if you guys are like, well, why, Josh? Why not just get in and buy those dips? Why? Those unforeseen variables. You guys remember SESN, right? SESN, halted pending news, gap down to 70 cents. There's risks associated with being in an open position, right? When you have an open position, you're exposed to risk. As professional day traders, what do we have to be good at? Managing our risk exposure, managing our risk, right? So if you're in an open position, you're actively exposed to risk. So my mindset is, if I can get in and get out quick, a minute, 2 minutes, I have less market exposure, which means I'm doing really good at managing my risk as a professional trader. That's just kind of what clicks in my head. I like to get in and get out, get in and get out. Right? Because there's less risk exposure because I'm not always having an open position, right? My open positions average 2-3 minutes versus an hour, right? Just because there's a lot of those unforeseen variables. And definitely the mindset that I have with a small account, sitting back, disciplined on those hands. Sitting back, disciplined on those hands. 1-2 trades a day, 1-2 trades a day most. Some days not even trading, right? It's definitely a psychological shift. You definitely have a different mindset when you're trading a small amount of money versus a larger amount of money. Call it what it is, Alpha. You're a bank robber. The master of the heist. Get in and get out quick. Get in, take the money, and run. The longer you stay at the bank, the more effed you are, right? You're going to jail. You're done for, right? You're done. The longer you stay in, the more screwed you are. If you get in and get out quick, you have better odds of getting away with that money. I love it. Dave started off using leverage, then no leverage. Yeah. Like I said, I'm not talking bad about him. I like him. He's a good trader. I like Ross, right? We talk good about people in here. We don't bash other communities. We don't bash other traders, right? He's a good trader, right? He's good. He's been doing it for a long time, 15, 20 years, right? He's been in the market a very long time. He's great. All I was saying is like, hey, you give me a CMEG account with $1,000 with no PDT rule? Let's go. Let's go. But again, I'm not a fan of, using those offshore brokers. MRIN, it's still building higher lows and higher highs. So technically right now it has room to VWAP, which is 961. Anything over the VWAP, you have room to 10, 1025, 1050, 1075. So MRIN could definitely continue its little grind up. It's just kind of sideways now, but it's still technically in an uptrend on MRIN, right? Look at the uptrend, right? You had a downtrend. Now you're building higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Right now, as long as it continues to put in these higher lows and these slightly higher highs, it's still technically in an uptrend. The trend is your friend. The long position could still definitely work out, but you just need to bring those stops up, bring the stops up, bring the stops up. We still continue the uptrend, bring your stop up, and still scale out when you have the opportunity to scale out and lock in some profits. All right, that's official, guys. That's official. I'm going to refund my main account, guys. Going to refund my main account, and we'll be back rocking and rolling probably in the next week or so. So come October, I'll have that account refunded, guys, and we're going to start rocking and rolling with the main account again. Sound good? Sound good. I like it. So right now, is it 11:08 in the market? Tom, are you here, Tom? Tom. I think it was Tom that asked for a lesson yesterday, and Tom's recommendation for a lesson was setups that are high probability setups. Setups that have high odds of success with little amounts of risk. I think that was Tom. Yes. All right. So this is a pretty long lesson. There's a lot to talk about, but I think we should break it down into 2 segments, 2 days, right? Day number 1 being today, we talk about these setups, right? We just educate you on the setups, right? Setups that have high probability, right? Setups that, have 80-20 success rates, okay? All the setups, bearish setups, bullish setups. We just really dive into that, okay? And we talk about those, and tomorrow we go back and talk about criteria, right? Criteria that needs to be met before you enter the trade. And once you enter that trade, where do your stop losses go on those particular trades, right? Where's your targets on those particular trades? So today I would say, so to not overwhelm everybody, 2 hours long, to not overwhelm you guys, we just go ahead and focus on the most popular technical patterns, right? Bullish or bearish, really getting you guys up to speed on which ones have high probabilities, right? High success rates. And then tomorrow we continue that lesson with talking about the criteria behind those. And we talk about where the entries are, the stop losses, and the targets on those setups. Does that sound good, guys? Yes, Angel, we are on today at noon, 100%. And then Mr. Joshua, if Joshua's in chat, he is. We are on at 11:45. All right, so we have about 50 minutes to rock and roll. And again, to talk about some of the most popular technical patterns. And what we're going to go ahead and do, guys, is we're going to break this down into bullish and bearish, right? So bullish chart patterns and bearish chart patterns. So get my handy dandy paint tool, right? Go ahead and start that recording. And today we're just going to talk about popular technical patterns, right? And let's go ahead and start with bullish patterns, right? Bullish patterns, okay? So one that hits everybody in the head, the most popular bullish technical pattern is a what? It's a bull flag. What is a bull flag, right? A bull flag is a stock that's in a nice uptrend. The stock is ripping to the upside, right? Ripping to the upside, ripping to the upside. And eventually you have traders come in and take profits, right? And then you have buyers saying, hey, you know what? It's in a strong uptrend. Let me buy the dip. But you still have traders taking profits, right? And you have traders saying, hey, let me get in on this just in case it moves higher. And you still have traders taking profits. And then people saying, hey, that's a bull flag, right? That looks like a really nice bull flag. Again, you have lower highs and you have higher lows, right? That is going to be okay, I said flag, right? When we say bull flags, we mean flags and pennants. This is a bullish pennant, right? It's a pennant. These lines intersect one another. They will eventually cross, okay? So again, it's where basically buyers are in control of the stock. Buyers are in control, pushing the stock higher and higher and higher. And eventually, you're going to have profit taking, right? You get that initial, pullback from profit takers. And then you got traders coming in and buying the dip, right? Maybe scalping it. Traders taking profits. More traders coming in, buying the dip. More traders taking profit. And during this period of time, right? That's considered consolidation, right? It's consolidating. It's moving sideways, right? And when a stock is consolidating, you want to see that consolidation occur on less and less and less and less volume, okay? So when that stock makes its initial move up, eventually you're going to get to a point where traders are going to take profit, traders buy the dip. Traders take profit. Traders are buying the dip. And then you start to see that consolidation. You start to see that pennant form. And now traders are saying, hey, this is a bullish pennant, right? If we break the downtrend, right? If we break outside of this pennant, basically above this downtrend, that is a bull flag. I will go long. And traders will then wait. It breaks out. They'll be making entries. And the stock will continue higher, right? So a bullish pennant, right, is a bullish chart pattern, right? Is a bull flag. It's a bull pennant. It is a leg to the upside, followed by a period of consolidation. And then buyers move back in, right? Again, when that stock is consolidating, you want to see it occur on less and less and less and less volume. And then boom, when it breaks out of that consolidation, it breaks that downtrend, you want to see high volume. And it is a continuation chart pattern. So it's supposed to continue its trend, right? It's in an uptrend. It consolidates sideways. And when it breaks out, it is supposed to continue its trend to the upside, right? That is a bullish pennant. Now you have bullish flags. What's a bullish flag? It's pretty much the same exact thing, guys. The only thing that's different with a bullish flag is the way the consolidation forms, right? So you'll get that initial pullback. You have buyers coming in to buy the dip. You'll have more profit taking. You have buyers coming in to buy the dip. You'll have more profit taking, and you have buyers coming in to buy the dip. So it's the same concept. It's the same concept, right? You have the stock making a big move to the upside, and then you have the stock consolidating, right, in a downward fashion. Instead of making lower highs and higher lows and getting squeezed in like a triangle or a pennant formation, now you have the stock making lower lows and lower highs inside of a flag, right? And it's just a flag, right? Imagine a flag, right? You have a pull, right? There's your flag pull, and you have that flag blowing in the wind, right? So again, you have your leg up, which is your pull. You have this period of consolidation again on less and less and less volume, consolidating inside of a flag-like formation, right? And again, it's a continuation pattern. It's a bullish pattern, right? This stock is intended to break out of this consolidation and continue to the upside. So again, you have bull flags and you have bullish pennants. And they're both the same thing, right? They are moves to the upside, right? One's a pennant to where it consolidates with higher lows and lower highs. And then you have bullish flags that look like flags, where the stock is putting in lower highs and lower lows. But these are both breakout patterns, and they are both continuation patterns intended to continue the trend to the upside and rip and run and break on out, right? So those are the most popular bullish setups, are bull flags, right? And bullish pennants. So when I say bull flag, right, it could be a bullish pennant, right? It could be a bullish flag. But when I say, hey, the stock is flagging right now, I'm not just saying it's doing this. It could be doing this, right? Let's keep it simple. It's a bullish continuation pattern. Instead of saying, hey, we got a pennant, we got a bullish pennant, right? It's flagging right now. The stock is flagging right now. Basically, the stock made a leg up. It's consolidating sideways, and it's looking like it could break higher to the upside. It is flagging. These are bullish chart patterns, and they are continuation patterns intended to break out of the consolidation and continue the trade higher, continue the trend higher, right? So those are bull flags and bull pennants, but we classify those as just flags, right? The stock is flagging. What's another really popular technical pattern as well, right? Can you guys think of one? We have ascending triangles, right? An ascending triangle, guys, is where the stock moves up into a level of resistance and just simply pulls back. And then buyers move back in, right? Up to resistance. Sellers are still strong, profit taking, right? Buyers come back in, push it right back up. Sellers are still strong, there's profit taking. And you can see that every single time it pulls back, it's pulling back higher and higher and higher. We could visually go grab a trend line and connect our lows, right? So we can connect our lows, and we can see that every time the stock goes up into that level of resistance, it pulls back, higher low, back up to resistance, right? Pulls back, higher low. And it continues to do this until it gets tighter and tighter and tighter. And eventually, the stock will get so tight, right? It'll get squeezed. Right now, it's getting squeezed tighter and tighter and tighter, that eventually someone makes a move, right? Someone takes control. Right now, it's 50-50. You got sellers coming in, taking profit, buyers buying it up. Sellers taking profit, buyers buying it up. Sellers taking profit, buyers buying it up. Right now, it's 50-50 between buyers and sellers, but you can see that buyers are still more in control because the stock is holding higher price levels. So we already know that right off the bat, buyers are more in control right now, right? Because every time it pulls back, buyers are stepping in and pushing it right back up, higher and higher and higher. This is an 80-20 setup, right? 80% of the time when this stock gets tight, buyers typically win. 80% of the time, buyers will win and break the stock over resistance, and it will continue its trend higher. This is called an ascending triangle breakout, right? It's an ascending, right? You have ascending lows, and it's forming a triangle, right? It is a squeeze formation. It is an ascending triangle formation. We have ascending lows, and we have flat resistance, and this stock will get tighter and tighter and tighter. We already know that buyers are more in control than sellers, right? Because it's building higher lows consecutively, consistently to the upside, and eventually someone makes a decision. Buyers or sellers take control. On this type of chart pattern, 80% of the time, right? 80% of the time, buyers will take control and push this over resistance, and it will continue its trend, right? It's in an uptrend, right? This is a continuation pattern as well. Now, 20% of the time, sellers will win, and it will move on down, right? And that's okay because stops are nice and tight. Stops are nice and tight under that trend line, under those prior lows, right? The reward is really nice because it has a lot of room to the upside, assuming that there's no overhead resistance nearby, right? Again, this is a bullish chart pattern. This is called an ascending triangle breakout. These are 80-20 setups, right? 80% of the time, the buyers take control and break this out over resistance with a lot of volume, right? And the stock will then continue its trend higher. 80-20 setup, an ascending triangle breakout formation, right? What's another bullish chart formation, guys? Right? We talk about this quite a bit. We actually had one on WIMI, right? What is that? It's a cup and handle formation, right? Where the stock moves up into a level of resistance, right? And sellers move on in. Stock pulls back. Buyers come in, buy the dip, push it right back up into resistance, right? Sellers take profit, right? But buyers move back in, okay, and start buying it back up. And typically what we see with cup and handles like this is the stock will break on the third point, point number 3. So when it comes back up to that third point, boom, you get that nice big break to the upside. This is called a cup and handle formation. Why is that? Because it looks like a cup and a handle, right? There's a nice big pot of coffee, right? Nice big cup of coffee. You can see that there's a nice big cup and a higher low, which symbolizes, right, the handle. These are bullish chart patterns, cup and handle. 80% of the time, the buyers will win, take control, and break this over resistance and continue its trend to the upside. However, 20% of the time, right, sellers will win, right? And it won't break over resistance, and it will just continue to fall and fade and fall and fade. And that's okay because we know 80% of the time, buyers are going to win and push this over resistance. That's another high probability setup. Go look at WIMI, right? Buyers push the stock up into 458 resistance. The stock pulls back. Buyers move back in and push it up into resistance, right? Sellers, it pulls back. But then it holds that higher low and buyers come in and push it over resistance. Big time volume, big time break, right? 80% of the time, buyers win. This was a cup and handle, right? Big U shape, followed by that quick higher low, breaking on point number 3 and ripping to the upside. Another continuation pattern. This stock is in an uptrend, right? It's a continuation pattern to continue its trend higher. So another prime example of a cup and handle formation, right? Real time. Today, we called this out. You guys made some profits on WIMI. Again, this is an 80-20 setup. 80% of the time, right, the stock will break higher. 20% of the time, it will fail and move lower. So how do you take the trade? Well, this is how I take the trade, right? I mark up my level of resistance, right? I know my pullback low. I know that if I take a Fibonacci retracement, I can gauge where that retracement should take place. right? And I know that most of the time it comes down towards around that 50% fib, right? So here in this example, we can see that after running our fib here, that we pulled back very close to the 50% fib. We also pulled back into that prior high, right? So we also pulled back to that prior high. So what do? I anticipate the cup and handle. I'm not getting in here because I may miss the trade and get in late. I will anticipate the cup and handle formation, right? I will see the stock rip up. Obviously, I don't know it's a cup and handle, saying, hey, looks like it could be a cup and handle, guys. And we said it, look, 0.1, 0.2, pulling back into that prior high, very close to that 50% Fibonacci retracement as well. And I see something like this, right? And I start to see that U shape. I'm going long. Where am I putting my stops? Under that prior high. So my stops will be right there at that point in time, right? I'll have stops, right? What's my target? Well, in this case, we had a $5 target coming from the daily chart. So I would be making my entries here while that handle is forming, anticipating the break and taking profits all the way up, right? So that's how I trade it, right? The right way, the textbook way to trade it is wait for the stock to break out. But here's the thing that I've realized over my 7 years of trading. When a cup and handle or any other kind of bullish chart formation breaks out, and it's a healthy breakout, they rip to the upside quick. So I'm not getting filled at 458, right? I'm not getting filled at 460. By the time the stock breaks out, I'm probably getting filled at 470 and 480, right? Now I have 30 cents of profit, right? And where's my stop? Back down below that level of resistance, right? So again, I'm getting in at the highs. I'm getting in way too late and my stop is way too far away, right? Because if I'm looking for the cup and handle to break out and I'm getting in at, say, 475, right? And that's by the time I got my fill. I have to take profit at $5 because that's resistance. I'm making 25 cents a share. Where's my stop? My stop has to be back down below that breakout point, 458. So let's say I go with a 455 stop. Right now I'm risking 20 cents. Is that a good 2-to-1 setup? No. It's almost a 1-to-1 setup. Not a good setup. But by anticipating the cup and handle, right? And when I say anticipate, I'm looking at the price action. I'm looking at the volume. I'm looking at prior levels of support and resistance. I'm looking to see how the stock's looking, how it's forming, how it's setting on up, right? And if I can really get confidence that, hey, this stock is looking really good, it looks like it has that high probability cup and handle setup, I will anticipate the trade and I'll be getting in way before the break, right? I'll be making entries that say $4.50 with my same $5 target. Now how much am I making? I'm making 50 cents a share, right? Where's my stop at that point in time? Underneath that low point, right? Underneath that low, underneath that prior high, where we came down and formed support. So I'm in, my stops would be right there at, say, 435, right? Underneath that 440 prior high. So now what am I risking? I'm risking 15 cents. What is that? That's almost a 3-to-1 setup, right? It is a 3-to-1 setup, right? It's a little over a 3-to-1. So by doing that, I will anticipate the trade. I'll be getting in, and if I get stopped out, I'm getting stopped out for 15 cents. Big deal. I move on. But when I bang those trades and they're winners, they're such high risk reward setups that even if I get stopped out on 50% of these trades, let's say I anticipate all of my trades 100% of the time, I anticipate them all, right? But I'm really good at identifying volume. I'm really good at reading price action, and I have confidence that I could be right 50% of the time, right? Out of 10 trades, I can get stopped out of the 10. And on the other 5 trades, there's such good risk rewards that I'm still going to walk away extremely profitable. I could be wrong on 7 trades, right? I could get stopped out on 7, be right on 3, and still walk away profitable because I'm anticipating the trade, getting in before the move, and I have higher risk reward. So again, I will anticipate trades a lot, guys. You'll see me saying, okay, I'm getting in for the cup and handle. Boom, take profit. Or it curls over and it stops me out for a very small loss. A very small loss that's easy to recover from. That's what works for me. I like to get in before the move. As a new trader, I would wait, right? As a newer trader, I would wait, guys. I would. But here was the thing. As a new trader, I would see the stock break out and I would hesitate, and then get in. That's what was wrong about it, right? That's what was wrong about me and my approach as a newer trader. I would hesitate. If you guys don't hesitate, and you can read that level 2 and you see it breaking on over, you can make entries a lot earlier and you can still wait for confirmation, guys, right? You can still look at the level 2. You can still see the stock, okay, boom, boom, boom. And as long as you don't hesitate, you can still get in at a great price with a tight stop and still have the 2-to-1 setup. But my problem as a new trader, And what I think a lot of new traders struggle with is the hesitation behind their trades. They're not confident. So by the time it breaks, you're second guessing yourself. Second guessing. Holy crap, it is going to break out. Oh, it is. And now I'm in. Now you're buying at the top because you hesitated way too long. That's what I did. And that's why I got, stopped out a lot. And that's why I lost a lot. But if I could have removed the hesitation as a newer trader and still waited for confirmation, I would have been much more successful because I wouldn't have hesitated. I would have got in here, which would have still been a great risk reward setup. Okay. So you can anticipate your trades, but you have to stop out where you say you're going to stop out. Those are tight stops. You can't continue to hold the bag, right? And take a big boy loss. You have to cut those stops very, very tight. Or you can say, you know what? I want to wait for confirmation and I don't hesitate. Well, you know what? Waiting for confirmation, not hesitating, right? You still get in early and you still have a lot of room to the upside. But my biggest failure as a new trader, where I struggled the most, was seeing a setup, waiting for confirmation, second guessing, hesitating, and then FOMOing in. I would FOMO in, right? And that's why I anticipate my trades to get in early because I can cut my losses quick. And I'm not a breakout trader right now, but where I failed a lot was just simply hesitation, right? And then buying at the top because I feared the miss out, right? I could have been a buyer at 960 at the breakout point, but instead I'm getting it at 490 because of FOMO. I'm emotional now, right? That's where I struggle the most as a new trader, guys. And some of you may be struggling like that. So again, you have to remove the hesitation from your trading. You can't second guess yourself. How do you remove hesitation, right? By building a plan. Building a plan. Okay, I see 460 resistance. I'm going to put a buy stop order in at 461, right? I'm going to put a buy stop order in. So right when it hits 461, I get filled, right? And I know where my stop's at. You remove the hesitation, you remove the emotions by having a plan. And your plan could be buy stop at 461 with a hard stop at 439 with a target of $5, right? You could already have a great plan to where you're not going to hesitate. But if you come in without a plan and you say, I'm going to buy over resistance without a plan, without understanding your risk, that's when you hesitate. That's when you get emotional. And that's when you start buying at the top just to get scared to take your profit or take your loss just to watch the stock run higher. All right. You don't want to put yourself in that position, guys. But anyway, I anticipate a lot of trades because I am okay and I'm good at reading price action, reading volume, reading the time in sales, reading the level 2, right? So that's what works for me and my edge. As a new trader, it can be a little overwhelming, to read the level 2, the time in sales. It's moving so quick, right? It takes time to get a sense of price action and actually understand and flow and feel the price action. But as you are in the market more, day after day after day after day, guys, you'll start seeing these setups. You'll start noticing the volume. You'll start seeing, what that level 2 looks like. You'll get a feel of the price action and you'll be able to take these trades before they even happen. But that does take time and that's something that I can't teach. No one can teach how to really get a feel for the stock and how to really understand the price action. You learn that by being in the market and seeing these stocks play out, seeing them work, not work, and what happened before, during, and after. And then you start to see those things kind of happen again on your future trades. And that's when you can start getting in early and have still confidence way before that trade even starts to break out and way before the confirmation is even there. The time in sales is the same as the tape. Yep. So time in sales, right? The TNS, time in sales, is the same thing as the tape. So if you ever hear anybody say tape reading, it's time in sales, right? That's just some terminology, right? It's just a cool little word. So again, time in sales is the tape, okay? Absolutely. So again, another bullish setup, guys, you have cup and handle formations, 80-20 setups, right? We saw that beautifully on WIMI, right? And it worked out great and it was a big time winner. Hit target, exceeded target, and we had nice tight stops. So again, perfect example of a cup and handle on WIMI. What's another bullish chart formation? Well, you have wedges, right? You have wedges, right? The stock is selling off, okay? The stock is selling off, right? Coming down, starts selling off, but it starts getting tighter and tighter and tighter and tighter inside of this little squeeze formation. This is called a wedge formation, right? It's where the stock is selling off, probably hitting lows of day, low of day, low of day, low of day, low of day, until eventually it gets so darn tight that 80% of the time buyers move in, it breaks over that downtrend, and it reverses into an uptrend, right? This is a wedge formation. And a wedge formation is classified as a reversal chart formation. So if you guys are writing anything down, right, you have classifications on, patterns, right? You have continuation and you have reversal, right? We just talked about continuation patterns, right? What is a continuation pattern? A bullish continuation pattern. Well, you have flags and pennants. You have cup and handles. You have ascending triangles, right? Those are bullish continuation patterns. They're already in an uptrend and they're going to continue the uptrend. And then you have bullish reversal formations, right? Where the stock is in a downtrend and it's going to reverse into a uptrend, a bullish reversal pattern. So now a wedge would be classified as a what? As a bullish reversal pattern, because it's going to reverse out of its downtrend. So if you ever see a stock selling off, but it's getting tighter and tighter and tighter and tighter, 80% of the time, buyers will take control, push it out of that wedge, and it will start an uptrend. It will reverse from downtrend to uptrend, right? That is a bullish reversal formation. What's another bullish reversal formation, right? What's another bullish reversal formation, guys? Do you guys think of anything? Or boom, boom, bang, right? Maybe the boom, boom, bang, right? Nice little downtrend break, inverse head and shoulders, right? There's a lot of them. So again, another bullish reversal formation is where the stock is selling off, selling off, selling off, right? It'll eventually start to try and put in a higher low, right? So you will actually see the stock making lower lows, lower highs, lower lows, lower highs, lower lows, and it will actually start to try and put in a higher low right there. And most of the time, that higher low will take place right at or right above that prior low right here. So you see the low and the lower low and the higher low typically forming right around that prior low right there, right? This is a inverse head and shoulders formation, right? You can see a left shoulder, you can see a head, and you can see a right shoulder, normally with a very well-established neckline. And again, this is a bullish reversal formation where the stock is looking to break that neckline, basically putting in a higher high off the higher low and reverse into an uptrend, like what we saw here today with MRIN, right? MRIN, downtrend, 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 boom, hits a low, right? Pops up, hits a lower low, boom, pops up, starting to put in this higher low right above that low here. We can see low, lower low, higher low. What can we do with MRIN? Well, at that point in time, why did I take the trade? Because I saw the reversal, right? I can grab my trend line. I can connect those highs, right? That is my neckline. It's clear as day that we have the higher low forming, right? There is a low. There's a lower low. There's the higher low. That's a left shoulder. That's a head. That's a right shoulder with a nice neckline, right? Again, the stock's getting that higher low, breaking the neckline. We could look to take it long for the reversal. Now, this stock is taking forever, but again, it did make it all its way to the VWAP, right? Usually these break out quicker, faster, more volatile. In this case with MRIN, it simply did not, right? The stock did reverse. It broke its neckline, came back down and retested, moved higher, right? It took quite a bit of time. But these are bullish reversal formations, 80-20 setups on these inverse head and shoulders. Where do you put your stops on these? Right? Let's say you go long on this reversal formation, right? And you're long, right? Where do you put stops? Underneath the prior low. It's that easy, right? Very nice tight stops right underneath that prior low. So if the stock falsely breaks out and comes down, you're stopped out. But again, the stock pushed up, came down, never dropped down, boom, 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 all the way up into our VWAP targets. They're on MRIN. That is a inverse head and shoulders formation. That is a bullish reversal formation, right? That's another very popular setup, guys, okay? That's another 80-20 setup, is a bullish reversal pattern. That is an inverted head and shoulders. What's another one that we have, right? It's our typical boom, boom, bang, baby. It's our boom, boom, bang, right? It's where the stock is in an uptrend, moving on up. Then it starts to sell on off, right? Ugh, selling on off a little bit. Ouch, right? Sellers are coming in. Boom, it's selling on off. Bounce back up. Selling on off. Bouncing back up. And you can see that we have a clear downtrend on the play, right? Not really a good downtrend, but it'll work for this example. And where it's downtrending, bouncing into the downtrend, downtrending, bouncing to the downtrend. And eventually what it will do is put in a higher low, right? You'll eventually see a higher low form. Buyers are stepping back in to break the downtrend to reverse back into its uptrend. It's in an uptrend, right? Now it's downtrending. And eventually, 80% of the time, when you see a stock from an uptrend to a downtrend into a level of support, forming a higher low into the downtrend on point number 4, 80% of the time, you will see buyers retake control of that stock and push it from a downtrend back up into its uptrend. This is the boom, boom, bang, right? It's a downtrend break setup. This is a bullish reversal formation. These setups occur after the stock's already been in an uptrend. So big uptrend, right? Big uptrend. Now it's downtrending back into a level of support, right? It bounces, puts in a higher low. You start to see volume move in and break the downtrend on the 4th attempt. And 80% of the time, buyers will come in, right? And take control of the stock once again and push the stock higher and resume its uptrend that it was already in before, right? So again, we have another bullish reversal formation, and that is the downtrend break setup, the downtrend break strategy, the boom, boom, bang. Okay? So again, another one. So there's quite a few bullish chart formations, guys, right? There's a lot. And we just classify those as what? Continuation patterns and reversal formations, right? So bull flags, bullish pennants, ascending triangles, and cup and handles, those are already in an uptrend, right? Those are already uptrending. They are occurring at or near highs of day, okay? Those are already in an uptrend. Those are continuation patterns. But then we have bullish reversal formations where the stock is in a downtrend and it's starting to reverse and break out of its downtrend into an uptrend. And those are going to be those inverse head and shoulders formations, right? With that neckline, and you're looking for that stock to reverse and move higher, okay? The boom, boom, bang, where the stock's in a nice uptrend, selling off, and then eventually it'll break its downtrend and reverse higher, right? You have those. And you have your wedges, where the stock is falling, right? It's falling, getting tighter and tighter and tighter until eventually buyers step back in, take control, and it reverses out of its downtrend into an uptrend, right? So those are going to be bullish reversal formations, okay, guys? So there's a lot of great setups. There's a lot of patterns. There's a lot of strategies, right? But understanding how to look at those, how to see those. And again, I always like taking these beautiful drawings, right? And trying to go find something on the chart, right? We could see the inverse head and shoulders reversal formation on MRIN, right? That's why I took the trade. We can see how it worked out really nice. We can see a cup and handle formation on WIMI and how that's supposed to work out in real time. Do we have any example of a downtrend break setup? Well, AEMD was one that failed, right? AEMD was one that failed. The stock came down 1 point, 2 points, 3 points, didn't break on point 4, broke on point 5, not with a substantial amount of volume, and this stock ended up falling and fading. But the beautiful thing about these trades, guys, is what is your stop? You know your entry. It's a break over the downtrend. You could have made an entry, let's say right there. Let's go ahead and remove this. And let's use AEMD as an example for the downtrend break that just didn't work, right? You have a downtrend. You can clearly see the downtrend. You have your level of support right there. So 511, you know where your stop's going to be, right underneath that level of support, right? So that red line is your stop loss. The green line is your support. And you know that you could have made entries right there around $5 and let's call it 30 cents. So you know where your entry is going to be when the stock breaks the downtrend. You know where your stop is underneath that level of support. Where's your targets? All of your prior highs, right? All of your prior highs right there, and right there. Those are going to be all of your targets, right? The stock pushes up, first target, pulls back, pushes up again, second target, pulls back, pushes up again, high a day target. I really like the boom, boom, bang. I really like the downtrend breaks because 80% of the time, this stock will break and at least get first and second target. May not always get back to the high a day, but you do have a high day target. So coming into this trade, all right, you're going long at 530. You got stops at 508, right? What's the stop loss on that trade? It's 22 cents. It's 22 cents. Can you get at least 44? Yeah, absolutely you can get 44. You can get 60 cents out of this trade back up to the high a day. That's why I really like the boom boom banks, right? Because the stock is in an uptrend. Number one, it's in an uptrend. And now it's in a downtrend into a level of support. Look at this. It came down and double bottomed at a level of support. Looking to break the downtrend to go from uptrend to downtrend back into its uptrend, right? Breaking the downtrend line off market structure, and that market structure forming on a valid level of support, breaking out of its downtrend. 80% of the time it will pick back up and resume its uptrend. 20% of the time it doesn't work, right? In this case, it was a false breakout. It didn't work, but your stops were so darn tight that it's okay. That when you nail one of these trades, right, it will completely eat up that loss on the losing one and put you really nicely in the green. So another one, again, AEMD, one that didn't work out, was the downtrend break setup, right? So again, I really like trying to find some of these examples on real life stocks. How's SOFI doing, guys? I haven't looked at SOFI in a minute. I got to take profit. Good thing I thought about SOFI. I got to log in and take profit. I'm up 122% on SOFI. I got to lock it up, guys. I got to lock it up. SOFI, your options expire. I got it. I just want to sell, mother trucker. Sell to close. 40 cents. Let's go ahead and take 5 right now. Let's go ahead and take 5 on Actually, I'm going to take it all. I'm going to take it all on SOFI. We're right at that gap fill, so I'm out. $400 swing trade on SOFI. Not bad. Not a bad trade at all, guys. 150% on SOFI. So just lock that up completely. I am 100% out of SOFI. I logged into my phone to do it, guys. I wasn't logged in on Webull here on my computer, so I went ahead and got out there on SOFI. So yeah, not a bad trade there. What did that equate to as far as P&L? $224 swing trade on SOFI. I invested about $200. I made a little over 100% there on SOFI. So I bought 2 contracts at 30 cents, 2 contracts at 28 cents, 2 contracts at 11 cents to average down, and 2 contracts at 12 cents to average down. That brought my cost basis down to from 30 down to 15, and I just took profit at 41. So again, at a 15-cent cost basis or a $15 cost basis, I just sold all 10 of those contracts at $41, which again was a little over 100%. 224 on the SOFI swing. Again, a trade that I honestly thought wasn't going to work out, right? It was a great moving average squeeze formation that just didn't work out, and I was willing to take that loss, which was my investment. Every now and then, stocks work out in your favor. I already assumed that was a loss. I already took it as a loss, but you know what? What a good day. $224 on SOFI on the swing trade. So thank you, Casey. Thank you, Casey. I am green on the day now. Woohoo. I'm green on the day. But again, when I trade these swing trades, right? When I take trades with options, primarily options, okay? My investment is my loss, right? That's how I go about it, right? Because I know I really need sometimes to let these trades work out, right? To give them some breathing room, to let them work out. I have realized as a newer trader, right, trading options, that if I would set a 20-30% stop, I'd get stopped out a lot. And if I would have just let it breathe 60-70%, every now and then those trades would turn back around. So I'm like, how do I put myself in a position to where I can let them go to shit and still give it enough time? I only invest what I'm willing to lose. Will I throw $1,000 into an options trade? Nope. Why did I only go $200? That's not a lot of money. Why did I only go $200 on SOFI? Because $200 is what I was willing to risk. And I knew I had great upside potential. 100, 200, 300%, right? I was able to get about 120, 130% out of it. But again, my loss was my investment. And having that approach, I see 3, 4, 500% winners, right? BBIG, ATER, another 100% winner, right? And I stay profitable that way. Yeah, I mean, most of the time, sometimes I get stopped out and they expire worthless and I lose my investment, but I'm putting myself in a position to where I'm okay with what I'm investing. I'm okay with that risk. And, 70% of the time the trades work out and I'm still profitable on my option swing trades. So, it was called, what? Boom Boom Bang similar. So is a Boom Boom Bang similar to a double top or double bottom? Totally different. Nope. The Boom Boom Bang has a different approach, has a different, it's a different strategy, right? Different criteria that needs to be met on the Boom Boom Bang. They're kind of similar, but they are different as far as the way you execute the double tops and the double bottoms, right? So the Boom Boom Bang does have just a little bit more criteria behind it that needs to be met to make it a good Boom Boom Bang or a good downtrend break setup. Why was I thinking SFIX options today? I was thinking SFIX options today because, again, they had good earnings. And I was looking to see if this stock was going to break over 42. It never did. It came up to 42 and it failed. We never had confirmation. But if it was going to break that 42 level and those highs, we could have definitely seen some action up towards around $44 here on SFIX. Okay? So that's why I was thinking SFIX. It was up off earnings. And I was just looking to see how strong SFIX was going to be today. And if it was going to break over those pre-market highs, that definitely would have brought in a lot of volume and a lot of activity. And we could have seen SFIX go on a nice big run to the upside. It never gave us confirmation, though. It never got that break over that level. Never came down to 38.32 to go long. So again, SFIX was another one that we were watching, but we never got confirmation to take an entry. Just like LCID. It broke over those highs, but it failed immediately. Another stock that never gave us confirmation to go long. SAVA, another one that's just completely falling. Now SOFI, thank you, Casey, for bringing that to our attention. It worked out beautifully, and we just made some decent profits, right? About $2 a share or 120% on those options. Is ONTX setting up for that boom, boom, bang? ONTX. Is ONTX setting up for that boom, boom, bang? So, uptrend into a downtrend, right? Okay. So, we know that it's in an uptrend. It's now in a downtrend. We have to connect our highs, number one. So, let's go ahead and connect our highs. Right? Is it pulling back into a level of support? Well, it is. Look at that. We have that prior level of support before that big rip up. It is now downtrending into that level of support. Now all we need to see is volume move in for the break of this downtrend, right? So this is what we need to see here on ONTX. Again, stock's in an uptrend. Now it's in a downtrend. Boop. Boop. Now we need to see the stock hold a double bottom or a higher low and see it break the downtrend with some good buying volume, right? Stops would be below that low point, so right below 6. Your entries would probably be somewhere around 620, right? So you'd probably be risking maybe about 20 cents on this trade at most, right? 20 to 25 cents on the trade at most. You're looking for that stock to have volume move in, break that downtrend, and move back up into those prior highs, right? Maybe right around 660. You might see it pull back and then rip back up into the 677. So yeah, absolutely. Number one, stocks in an uptrend, right? Criteria number one for the boom, boom, bang. Stocks in an uptrend, right? We can see that it's in an overall uptrend, okay? Right here. Trending higher, never lost the low, uptrend, uptrend. Now you see people taking profit, right? Now it's in a little bit of a short-term downtrend, pulling back into a key level of support. We want to see market structure set in. We want to see it break the downtrend and start the reversal back to the upside. There on ONTX, okay? So again, you first have to identify, are you in an uptrend? Yes. All right, now you're in a short-term downtrend. Great. Point 1, point 2, point 3. You have to see market structure set in, which is a W, right above that level of support. See volume move in for the break of the downtrend. That right there is an 80-20 setup that this stock will reverse from downtrend back into its original uptrend and push higher. Right? So yes, ONTX is a nice, right now, a little bit of a boom, boom, bang. A little bit of that downtrend break setup. So again, right now, it cannot lose that prior low. Right? As long as it puts in a higher low or a double bottom and you see volume move in for the break of this downtrend, that is confirmation that you could see this go back into its overall uptrend. So if your SPY call is in the money, you should be green. So you bought a 438 SPY call 2 days ago, but it's not in the green. You would think it would be back in the green. You would think. What's your expiration? Is your expiration today? Or is your expiration Friday? If your expiration's Friday, you should still be slightly in the green. And again, WIMI was a couple different setups, guys. WIMI was just a couple setups all in one, right? Which really validated this even more. You guys noticed the boom, boom, bang, right? But what else did you notice? An inverse head and shoulders formation, right? So not only do you have the downtrend break setup, right? Coming down into a level of support, right? Decent, not the greatest, right? The better support was right there at 457. We lost it momentarily, but we came down to that spiking high right there, right? So we came down into a level of support, regained that better level of support at 459. So not only do you have a boom, boom, bang setup, the downtrend break approach, but you also notice what? What else do you notice right here at the bottom of this downtrend? Do you guys notice it? Do you guys notice what else we have at the bottom of this downtrend? Right? Not only do you have that boom, boom, bang, the downtrend break setup, and all the criteria was met for the trade, but you see another setup inside of that downtrend break setup. Do you see anything else here on WIMI, guys? You see an inverse head and shoulders, right? So not only do you have the downtrend break, but you also have the bounce, the lower low, the higher low, right off that low there, and you have a neckline, and it broke over the neckline. So not only do you have a bullish reversal formation, inverse head and shoulders, left shoulder, head, right shoulder, very quick, very fast, but it's there. You also have a great downtrend break setup as well. So you have two patterns inside of one, both 80-20 setups. I've taken that trade all day, 100%. How'd WIMI do? WMI, not too bad. 465, 476, 10 cents. Hey, green is green. 10 cents is 10 cents. All right, team. So we will pick up where we left off, right? We were talking about bullish chart formations, right? Continuation patterns, okay? And reversal patterns. It's always important to understand the classification of these setups, right? Is it a continuation pattern? Continuation patterns occur at or near high of days, right? So write that down. If it's a continuation pattern, a flag, a cup and handle, an ascending triangle breakout, right? Whatever the case is, right? And it's a continuation pattern. Those typically form at or near highs of day. Not at low of days, at high of days, okay? And then you have bullish reversal formations that typically occur at or near low of days, okay? So again, you have bullish continuation formations and you have bullish reversal formations. A bullish continuation formation will occur at or near a high day. And a bullish reversal formation will occur at or near a low of day. And it will reverse out of that short-term trend and resume its bigger trend, right? Back to the upside. We will continue this with bearish chart formations. For those of you that like to short, for those of you that want to get involved with shorting, right? We will talk about bearish chart formations. And the same thing, you have bearish continuation patterns and you have bearish reversal formations. So the same thing as bullish patterns, you have the same exact patterns, you just flip them upside down, right? You take every single pattern that we just talked about and all the criteria that needs to be met, and you flip them all upside down, and now you have bearish continuation patterns, and you have bearish reversal patterns. And we'll go ahead and dive into those a little bit more thoroughly here this afternoon before we kick off our afternoon commentary. So Tom, I hope that's what you needed, right? We do have a lesson that was a little bit more thorough, talking about entries, exits, stop losses. I was happy that we found some real-time live examples here in the market of these formations today and how you could have taken advantage of these formations. So what I'll do is I'm hiring a video editor to get these lessons complete every single day for us. So when we do a lessons, they will be uploaded inside of the video lessons library, usually within 24 to 48 hours. I do have one we did a few months back. It was about an hour and a half long. It was very good. It was very planned. I'm going to get that lesson uploaded first, and that's definitely going to mesh well with what we talked about today, and it goes a little bit more in depth as well. It goes into depth with your entries, your exits, your targets, more criteria that needs to be met. But this is a great foundation of the types of patterns that are in the market, the types of patterns that they are, right? And what you need to look for that to actually confirm before making your entries, and ideally where some of those stops should be at. So you look for these great setups. Absolutely. Then bam, I typically go in with big size, right? I usually go in with big size to get the reward, and then bam, I'm out of the trade, right? Right? I know that a reversal formation, right? I know that a boom, boom, bang, right? I know that a boom, boom, bang has potential to get back up to here and get back up to here. But every now and then, the market may not be healthy to get me to there and to get me to there. If the market's healthy enough, I would consider those to be home run trades. I'm getting in here with big size. I'm getting out here and there with some big time profits. I would classify that as a home run trade. But not every single trade and every single day, the market's going to get me to my home run levels, right? Or maybe it takes an hour to get me to my home run levels. I don't like managing a trade for an hour, for 30 minutes, for 10 minutes. I don't like sitting here looking at the same stock for an hour. Just looking and all right, whatever. I like to get in and get out. So again, I see a boom, boom, bang setup, right? I get in with big size, it pops up, I get out, in and out, done, base hit. Now, if it's a very big break and a big time move, okay, boom. I get my bigger targets, I make bigger profits. Awesome, Josh, home run trade. Can't go wrong with that. But I'm not gonna sit there and hold my position until I get to those targets. I'm going to analyze, I'm going to say, hey, this has potential to get there. Right? This is a good setup. It's meeting the criteria to a T. I'm going to get in, big size, get out, big size, make my nice big base hit profit, and walk away, regardless of it hitting those targets later on. Because that's not what works for me. What works for me is identifying these great setups. Right? Getting in, seeing the setup start to move, getting out. Right? Just in case it doesn't work out and it continues to fade and fall, at least I was in and out and I locked in my profits. If it hits those targets, that's fine. That's cool. It'll set back up, I can get back in. It'll set back up, I can get back in. That's what works for me, is identifying these setups, taking advantage of these setups, getting in with big size, getting out with big size, making $500 quick, right? Versus getting in with moderate size and having to sit here and trade the same thing for 30 minutes to an hour and monitor, right, that trade over a course of an hour to make the same money. I'd rather scale up my size, get in, get out, make the same money as I could make by holding a smaller portion for, 30 minutes to an hour. All right, team. So I do need to jump off here. I do have a call in a meeting with Mr. Angel. So I'm going to go ahead and jump off here, guys. Dive into that one-on-one. We'll be back here right around 2:30 as we kick off our Power Hour commentary session. All right, team. Enjoy your lunch. Trade smart. Trade safe. I'll see you guys back here right around 2:15 to 2:30 as we kick off Power Hour commentary.
is happening. The pandemic framework is going away. They're getting us back to something more normal.
Yeah, the evolution is happening, but it's happening very, very slowly. And I think Steve said this earlier today on a different program, that even if they taper at the speed that we're expecting, they're still buying a lot of bonds through the first half of 2022. So it's not as if suddenly the liquidity is going to leave the system or leave the picture. There's still a lot of liquidity that they're putting in.
Nothing out of the ordinary.
As for the market action, I think before we got the announcement, it was interesting to see that the 10-year yield had fallen and equities were up strongly. So at broad brush, you could assume that the market was expecting a dovish statement. But if you pulled back the cover a little bit and looked at what sectors were actually driving, it was cyclicals, right? It was materials, it was energy, it was financials, industrials. So what that would suggest is the market is actually ready for a little bit of a liftoff in the 10-year and a rise in rates. And I think that is what we're going to see in a gradual way.
Rick Santelli, let me turn to you. And if Steve, correct me if I'm wrong here, but did you say that the median forecast for inflation now in the short term is above 4%?
No. It's 4.2% for this year. They raised it. I'll give you the exact numbers just to be 100% accurate. It's 4.2% for 2021, and it's above 2%, which is their target. That's what I found interesting through 2023.
So that was my point there. That I misunderstood. Obviously, I thought that they were forecasting 4% inflation, which would have been a wild number based on what it's been running. Rick Santelli, your reactions.
Well, you know, the main driver of late has been flattening yield curves, and I think we have some charts ready. If you look at 30s minus 5s, that's at a 13-month flat. That's the flattest since August of 2020. And if you look at 30s to 10s, affectionately known as the knob spread, which is often a predictor of the general direction of interest rates, it's been collapsing. It's at the flattest it's been in 18 months, going back to March of 2020. It's approaching 50. And what this tells me, to now see that we are now below 130 in a 10-year note, we're now below 184 in a 30-year bond, but the short maturities are holding firm, that it's not about steepening anymore. It really is about flattening, and it's not the type of flattening that I think we could draw big conclusions about what you were discussing, Tyler. But the long end is crowded in fog. There's no way to get any kind of a signal about how it's going to eventually deal with inflation. But one thing we know, the dot plots have firmed up short maturities. So what's going to end up happening here is you're going to get 2-year and 3-year and 5-year yields slowly firming up, getting ready for 2023 and 2024, and how rates eventually need to move up. But the inflation information, as hot as it may be, CPI now 5.3 year over year, just is not making it out of the fog in the long end. The demand by overseas investors, just buying demand in general, and falling numbers ultimately in auctions is going to keep the long end firm. So I'm not making a statement about inflation. I'm making a statement about market logistics, that the surprise move sometime in the next 18 months is that if the markets wake up from this stupor of flatness, they're going to have a reassessment so knee-jerk, so breakneck quickly that we're not going to have much time to readjust, and all that will happen on the long end, but that's way down the road.
Rick, thank you, and stay right there. As the markets climb, the Dow's up 423 points. It's not session highs for the day, but it's certainly higher than we were going in by about 0.25% at this rate. But it's up 1 1/4. Let's bring in Bob Bassani with some more observations, Bob, on the market's reaction here.
Yeah, and we're up just a little bit, Kelly. I would say 4 or 5 points from the initial report that came out. There's remarkably little here. I can tell you what people wanted to know down here. I mean, has inflation met that vague benchmark that they had, the substantial progress? They still don't seem too concerned about this. Same sentence here. Inflation is elevated, largely reflecting transitory factors. Everybody down here asked me, what's the criteria for tapering, Bob? Are they going to tell us? I don't know. They certainly haven't told us here in the press release. Maybe we'll get a little bit more in the press conference, but I doubt that. The other thing everybody wanted to know was how many more in favor of a 2022 rate hike. We now know, as you heard from Steve there, now it's 9 out of 22. 9 of the people expecting in 2022. That was 7 before, so that's a little bit higher, but I don't think dramatically. I think more importantly, in the press conference, they're going to get questions from people who want to know, are they going to stick to inflation and jobs as their only criteria, or are they going to deal with other things? Does the Fed pay attention, for example, to the debt ceiling at all? Do they pay attention to what's going on with Evergrande and other China issues and other global issues? There is still this statement in here that says the Fed, the FOMC, will take into account a wide range of information, including financial and international developments. So everybody says they're just going to stick to those two core issues is probably not right. I'd like to hear what Powell has to say a little bit about international issues and the debt ceiling. Finally, just remember, from a stock trader's point of view, historically, the single biggest killer of all bull market rallies has been the Federal Reserve suddenly hiking rates or suddenly moving to an aggressive hawkish rate stance. They are not doing that right now, and I think that's one of the main reasons we're still seeing very benign reactions in the markets.
David Kelly, let me turn to you and get your overall reactions here, maybe particularly to what Rick said, and that is that maybe at some point there will be an abrupt change that will surprise the market. But let me also ask you this question. If you were in the room as a voting member here or an advising member of the Fed Board of Governors, the Open Market Committee, what would you be urging the group to do?
Well, at this point, I would do what they actually did. They did. I think it was interesting that they basically signaled that they are still on track to taper by adding that phrase about reducing asset purchases may be warranted. I think that's an echo of what Chairman Powell has said a number of times before about how they'll give us plenty of notice. So that is that's a first official warning that tapering is coming. I think it's coming in December. I think they'll announce a schedule in November and they'll start cutting purchases in December. So I think from here, this is what, I wouldn't do much different from what they're doing. But I think they need to during 2022, they need to gradually certainly start raising interest rates at the end of the year, maybe even sooner than that. And they need to bring rates back to more normal levels because this level of interest rates is distorting everything in global capital markets, and it is building up problems which are going to hurt us in the long run. So the economy is getting healthy again. They need to get back to normal.
John Bellows, what would you say about financials breaking out to session highs here?
Well, I guess first I'd just like to pick up on something David just said and on the flatness of the yield curve, which Rick mentioned earlier. I think part of that is this growth slowdown we're in. We've seen a material downgrade in U.S. growth. Obviously, there's a global growth concern emanating from China that's not just financial stability concerns, but instead there's kind of a broader growth slowdown going on there as well. And that's a big deal for the Fed because a big part of their outlook into 22 and beyond is kind of robust global growth. And so if you are in a period of slower global growth, I think that has implications for your rate hikes. It certainly has implications for the right level of yields on the back end.
But that's, John, that's exactly why I asked the question, because if what you're describing is true, then why would financials be breaking out to session highs here? If they're seeing a slowing global economy and a flatter yield curve, they shouldn't be acting like this.
Well, I think this kind of feeds into the Fed reaction function in the following sense, is the Fed's going to proceed very carefully with their removal of accommodation. And so the Fed does not want to upset the recovery here. They don't want to be the cause of further flattening. And so I think they're going to proceed cautiously. And so, I think you're having a little bit of a rebound on perhaps the Evergrande in China, and maybe financials are doing well on that. But I think the big picture here is that slower global growth may actually be a good thing insofar as it slows down the Fed a little bit. It takes a little bit of the heat out of the maybe inflation picture and puts us on a little bit slower, but maybe a little bit more sustainable course. And so, again, I think it causes the Fed to be cautious. I'm not sure it's a bad thing. I think actually slower global growth could be the foundation of kind of a more lasting recovery here.
Maybe then if I could rephrase what you're saying, if people look at the activity in the bank stock this afternoon, you would say it's not because of this sort of hawkish move on bringing the rate hikes into 2022. You would say it's actually a dovish interpretation of what the Fed's just done, even though they're signaling the taper, even though they pulled that rate hike forward. If you look across the financials right now, if you look at the way that Bitcoin's behaving, the way the dollar is, that it's actually because they're thinking maybe this is a more accommodative Fed?
Yeah, I think the Fed's in this phase of removing accommodation as expected. So I think they're aiming for neither hawkish nor dovish, just do as expected. And so I think there were people who were worried about a hawkish surprise today. That doesn't appear to have materialized. We'll hear what he says in the press conference. But I think the Fed's just doing as expected, neither hawkish nor dovish. And, as long as that's the case, again, slower global growth takes a little bit of the heat off, and I think that could be a good thing.
Getting back to normal, Steve, what is your thought of what that means in the context of what we've been talking about?
Good question. I want to come back to that, Tyler, but I do want to get to the issue. When I'm looking at the 2-year, when I'm looking at the short end of the curve, I am seeing these markets remarkably well behaved. There's a little bit of flattening, but I think maybe the answer to Kelly's question is not as much as you would have expected. I still have the 2-year at 22 basis points where it was going in. The market is giving the Federal Reserve enormous room here to do what it wants to do, which is to taper without increasing yields. This is a very big development. This is something that has been, I want to call it 6-8 months in the making, where Powell has been trying to get to this point, and he said, I'm going to taper, but he doesn't want to see that reaction in the bond market. I'm looking at Fed probabilities for December. I'm seeing a 48% chance of a rate hike, which is kind of like where it was, even a little bit lower, depending upon which service you use. So I think with what Kelly said, it's very important. This could all change by an hour from now or 2 hours. The immediate reaction here is a fixed income market that is remarkably well behaved and not freaking out. As to what's normal, you can go to the Fed's own projections and say, well, 2.5% is a normal funds rate because that's their long run, something like that, which, by the way, is just barely a positive number. Hard to know, Tyler. We've been living for a very long time with extremely large Fed balance sheets and a lot of zero interest rate policy.
Rick, you want to jump in here?
Yeah, I just don't expect you're going to get any kind of tantrums until we actually taper. And I know that's hard for many to grasp, but traders aren't going to put their money at risk betting on the horses of interest rates to gallop higher when the Fed has a lock on the corral. When the corral lock comes off, you're going to see some tantrum. I don't see any way around it. It's just how much of a tantrum and how that tantrum interacts with all the global buying and shortages of good quality, long maturity product.
Rick, I would just say that if you take the number, I was talking about this on another show, if the Fed starts to taper in December at $15 billion a month, it's going to buy an additional $660 billion of bonds. How much is that? That's QE2 plus $60 billion, Rick. So they may be opening the corral, but it's a little sliver, and only maybe the little foals can get out. Maybe it's time to bet a cheeseburger on a tantrum.
All right, let's. We gave the.
I'll bet on a tantrum. We'll talk about it later.
All right, Liz Young, we began with you. We're going to give you the last word.
Thank you. So I think another thing to keep in mind is if we do get an announcement of a taper in November, they're also going to release a new financial stability report in November. So that could be something, if there's good news in the financial stability report, that could be something that contains that tantrum that Rick is talking about. Lastly, all I would say is on my wish list from the Fed is I still want definitions of what maximum employment means so that we can set expectations there. And I want to know what their definition of some time is. They keep talking about inflation staying above 2% for some time. I think the market just wants to be able to set those expectations so that we can move forward without a big tantrum.
Can we just quickly go and show everybody in boxes for a moment? Do we now think the consensus is a November taper or December? Who thinks November?
Could I say something quick on that, which is...
Yeah, sorry, go ahead, John.
So they use the word soon, and to me that's more consistent with November. They could have said it will be appropriate this year, which suggests December, but I think by putting the word soon in there, if I heard correctly what Steve said, I think that's suggesting November.
David, quickly?
Yeah, I think they're going to announce on November 3rd a schedule which starts the taper in December.
All right, folks, thanks very much for all of your analysis. And for more of the analysis of the Fed's decision, stay with us. We'll be right back with more. We'll speak with former Fed Governor Robert Heller about the central bank strategy and what it means for the economy and your investments. And the countdown to the Fed Chair Powell's news conference is underway here. We got about 12 minutes to go. Keep it right here. We'll talk more Fed and the markets after this. All right, the Dow is up about 500 points after the release of the Fed's decision or non-decision. The Fed says if economic progress continues, tapering of bond purchases may soon be warranted. Let's bring in Bob Heller, former Federal Reserve Governor. Bob, welcome. Good to have you with us. What does soon mean to you? There was some discussion of how soon is soon?
Well, I would expect that it's probably November. Maybe December. It's a nebulous concept. It should have said in a few weeks or in a month or two.
Yeah. Let's talk about inflation, which is clearly running hotter, more than double the target. And the members of the board seem to be thinking that it's going to come back down rather dramatically, that most of it is so-called transitory, 2.2% prediction for next year. Still a little bit above the 2% threshold. What if it stays higher longer? Doesn't that put the Fed in a bit of a box?
I fully agree with you. Inflation, there's more to come. There's more in the pipeline. We have had adverse exchange rate changes, especially towards key suppliers such as China. We cannot get enough supplies into the country. So inflation will be with us for a while, and it may well increase. Wages are going up now. We have important wage negotiations going on, and that will set a floor under future inflation. So inflation, in contrast to what the Federal Reserve is saying, I think will not be temporary, but will be with us for quite a while.
And might that then accelerate the point at which the Fed begins to raise interest rates, or accelerate the pace of tapering of bond purchases?
Well, I think they will be probably cutting the purchases in half, roughly. So that tapering process will continue at a modest pace. It's still an enormous stimulus. The purchases, if they purchase 60 billion a month, that is still a lot of additional liquidity coming into the system every single month. But I think it will, if inflation persists, which I think it will move forward the point at which the Fed is forced to raise interest rates. And sooner or later, they got to do that.
Bob, what do you think would force the Fed to raise rates when they're already projecting inflation above target and indicating that's not going to be it's not going to make them in any hurry? What would force them? Would it be, like most things usually, would it be the market?
Well, it may be the market, but also, I mean, just rational thinking will do it. After all, inflation rate, even the Fed's preferred personal consumption expenditure deflator of GDP, is now running at 4.2%, which is more than double the rate at which they want to have it run. Congress told it to have stable prices. Well, we are far away from stable prices. So I would like to see congressmen really asking the Fed chairman, what do you consider stable prices? Over 4% inflation is not price stability. And so sooner or later, you've got to increase interest rates to reflect these price pressures.
And what you point to there is very interesting, Bob, and that is two things. One, wage hikes and the prospect of more as wage contracts get renegotiated. That's number one. And often it is the pace of wage growth that drives inflation. And also the seemingly intransigent supply chain issues involving China, involving factories in Europe. You can't find cars on the lot. Everything is backed up. And that sounds like a long-term issue to resolve, not something that's going to go away quickly. We have to move quickly here, Bob. Quick thought.
Absolutely. In addition, people cannot hire enough help, and that will put also additional price pressure out into the pipeline.
Mr. Heller, always good to see you. It's been a while, and we're glad to have you back with us. Bob Heller, we appreciate it.
Good to see you, Tyler.
Yes, sir.
And we're now waiting to hear from the Fed chair himself. Jay Powell will speak about the state of the economy, about the Fed's latest decision, and about all those concerns that Mr. Heller was just outlining. After the break, we'll take a look at some of the stocks with the biggest moves off of this decision. The Dow itself is up 447 points. We're back in a moment. Welcome back, everybody. We'll hear from the Fed chair himself in just about 2 minutes' time. Let's get to Mike Santoli in the meantime for some reaction. Now, Mike, we have a huge move in markets. This seems to be a really dovish reaction. We have equities up, we have commodities up, we have Bitcoin up, we have the dollar down.
Yeah, I mean, that's absolutely the initial reflex takeaway, Kelly. And there was a way, probably, to read this statement in a more hawkish manner. Basically, more projected hikes added by the committee members in 2022 and beyond. And obviously, putting that timetable out there, at least a loose one, around tapering. I think that you have to qualify the market response a little bit by saying we started super oversold this morning, rallied into the announcement, and are not yet back to where we closed on Friday. So all that set aside, I think you could almost say what Chairman Powell's job in the press conference was maybe is already accomplished, which is you're disconnecting the tapering timetable from an eventual tightening. That's what he's wanted to do. You're trying to get across that the inflation surge was transitory. That's what the 2022 projections suggest, and the market seems okay with that. And then finally, that nothing is set in stone, and we're going to be contingent on some measure of full employment that, by their interpretation, before we get higher rates. So I wonder if there's any further kind of upside in terms of investor response that might, be available to the chairman in this press conference.
Right. To put it differently, can he only spoil the mood, Mike?
Well, potentially, and I don't know exactly how at this rate. I mean, I do think you have to consider the initial starting point of this market rally before you say that everybody is just sort of by acclamation saying this is a perfect statement. I do think, though, it definitely tells you that the market is not afraid of the tapering process. It recognizes that when we think the patient is healthy, we don't need the placebo anymore, and taking it away, and I view it as mostly a placebo, is not necessarily going to hurt the patient from this point on.
Eventually, as Bob Heller just said, eventually, if inflation stays where it is, the Fed may have to. Is he coming in now? I'm sorry. We'll hold that question. Here is Chair Powell.
Achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, the Federal Open Market Committee kept interest rates near zero and maintained our current pace of asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to support the economy until the recovery is complete. Progress on vaccinations and unprecedented fiscal policy actions are also providing strong support to the recovery. Indicators of economic activity and employment have continued to strengthen. Real GDP rose at a robust 6.4% pace in the first half of the year, and growth is widely expected to continue at a strong pace in the second half. The sectors most adversely affected by the pandemic have improved in recent months, but the rise in COVID-19 cases has slowed their recovery. Household spending rose at an especially rapid pace over the first half of the year, but flattened out in July and August as spending softened in COVID-sensitive sectors, such as travel and restaurants. Additionally, in some industries, near-term supply constraints are restraining activity. These constraints are particularly acute in the motor vehicle industry, where the worldwide shortage of semiconductors has sharply curtailed production. Partly reflecting the effects of the virus and supply constraints, forecasts from FOMC participants for economic growth this year have been revised somewhat lower since our June Summary of Economic Projections, but participants still foresee rapid growth. As with overall economic activity, conditions in the labor market have continued to improve. Demand for labor is very strong, and job gains averaged 750,000 per month over the past 3 months. In August, however, job gains slowed markedly, with the slowdown concentrated in sectors most sensitive to the pandemic, including leisure and hospitality. The unemployment rate was 5.2% in August, and this figure understates the shortfall in employment, particularly as participation in the labor market has not moved up from the low rates that have prevailed for most of the past year. Factors related to the pandemic, such as caregiving needs and ongoing fears of the virus, appear to be weighing on employment growth. These factors should diminish with progress on containing the virus, leading to more rapid gains in employment. Looking ahead, FOMC participants project the labor market to continue to improve, with the median projection for the unemployment rate standing at 4.8% at the end of this year and 3.5% in 2023 and 24. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, despite progress, joblessness continues to fall disproportionately on lower-wage workers in the service sector and on African Americans and Hispanics. Inflation is elevated and will likely remain so in coming months before moderating. As the economy continues to reopen and spending rebounds, we are seeing upward pressure on prices, particularly because supply bottlenecks in some sectors have limited how quickly production can respond in the near term. These bottleneck effects have been larger and longer lasting than anticipated, leading to upward revisions to participants' inflation projections for this year. While these supply effects are prominent for now, they will abate, and as they do, inflation is expected to drop back toward our longer-run goal. The median inflation projection from FOMC participants falls from 4.2% this year to 2.2% next year. The process of reopening the economy is unprecedented, as was the shutdown at the onset of the pandemic. As the reopening continues, bottlenecks, hiring difficulties, and other constraints
Good afternoon, traders. What is up? How was everybody's lunch? And welcome back, Ed, Casey, Tom. What's going on? I see you guys have been absolutely crushing it over lunch. So good stuff. Good work, team. Obviously watching the Fed talk, Mr. J. Powell on tapering, raising rates. Obviously, they leave the discounted rate unchanged at a 0.25%, 11-0 votes. Thank you, Beth. Basically keeping the everything the same. Everything is unchanged right now. So still, we do have some uncertainty in the market with the whole Evergrande issue out of China. So that's still something to kind of keep an eye on, moving forward and see how the market's going to react to that. But as of right now, at least we do have a good sign with the Fed's leaving the rates unchanged at a 0.25%, and keeping the funds rates unchanged at 0% to 0.25. So still just listening in on what Mr. Powell has to say. But with that being said, my TD's running very slow. What about you guys? My TD Ameritrade is running very, very slow. So I'm not sure what's going on with that. Definitely a lot of volatility in the market. That definitely could be doing it. So if you guys want, I can definitely still push over the audio for you guys so we can continue listening to the FOMC meeting with Mr. J. Powell. If you guys want me to tap into my desktop audio, I can do that. Or you can just listen to my beautiful, beautiful, beautiful voice. Tell you what, I'm going to go ahead and tap in. And we're just going to just tune in and see what he has to say.
It's forecast that these favorable economic conditions will be fulfilled by the end of next year. As a result, the median projection for the appropriate level of the federal funds rate lies slightly above the effective lower bound in 2022. Participants generally expect a gradual pace of policy firming that would leave the level of the federal funds rate below estimates of its longer-run level through 2024. Of course, these projections do not represent a committee decision or plan and no one knows with any certainty where the economy will be a year or more from now. More important than any forecast is the fact that policy will remain accommodative until we have achieved our maximum employment and price stability goals. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to support the economy for as long as it takes to complete the recovery. Thank you, and I look forward to your questions.
Thank you. We'll go first to Rachel Siegel.
Thank you, Michelle, and thank you.
And this is
Chair
where it
Powell,
gets
for
interesting,
taking our
guys.
questions. When it comes to the taper and eventually to any rate increases, I'm wondering if you can walk us through what substantial further progress looks like, given the latest batch of projections that have PCE inflation coming in a little higher than the June projection, the unemployment rate also being higher than June, as well as the change to GDP lower than June. If you could help us make sense of all those things as you sort through what substantial further progress looks like, that would be great.
Sure. So the test for beginning our taper is that we've achieved substantial further progress toward our goals of inflation and maximum employment. And for inflation, we appear to have achieved more than significant progress, substantial further progress. So that part of the test is achieved in my view and in the view of many others. So the question is really on the maximum employment test. So if you look at a good number of indicators, you will see that since last December when we articulated the test and the readings today, in many cases more than half of the distance, for example, between the unemployment rate in December of 2020 and typical estimates of the natural rate, 50 or 60% of that road has been traveled. So that could be substantial further progress. Many on the committee feel that the substantial further progress test for employment has been met. Others feel that it's close. They want to see a little more progress. There's a range of perspectives. I guess my own view would be that the substantial further progress test for employment is all but met. And so once we've met those two tests, once the committee decides that they've met, and that could come as soon as the next meeting, that's the purpose of that language, is to put notice out that could come as soon as the next meeting. The committee will consider that test, and we'll also look at the broader environment at that time and make a decision whether to taper.
Thank you. We'll go to Howard Schneider.
Thanks, Chair Powell. Thanks, Michelle. So looking at the SEPs, we have now basically 4 years of inflation above target, and policy never gets to the long run rate. I'm wondering if you could address that from two perspectives. One, within the new framework that the Fed adopted last year, and second, from the perspective of the average household that's now being asked to pay higher prices and increasingly higher prices for 4 years running, when for some this year, real wages have actually gone down.
Sure. So as you can see, the inflation forecasts have moved up a bit in the out years. And that's really, I think, a reflection of, and they've moved up significantly for this year. And that's, I think, a reflection of the fact that the bottlenecks and shortages that we're seeing in the economy have really not begun to abate in a meaningful way yet. So those seem to be going to be with us at least for a few more months and perhaps into next year. So that suggests that inflation is going to be higher this year, and I guess the inflation rates for next year and 2023 were also marked up, but just by a couple of tenths.
Yeah, you know TD Ameritrade's messed up when you go look at one ticker and it shows you a completely different chart. Because I'm like, that is not the right chart. That's MRIN. Why did that happen? Right now, I'm just kind of scanning through, guys. Nothing too crazy. Just scanning through everything, seeing what we have, if anything. And not too much. Really, the attention and the focus is with the larger cap plays. You know, obviously, all the attention right now over on the S&P. You know, we really don't have too much going on with pennies. MRIN. Again, right now, we could see a nice little break of the downtrend, but this is slowly forming a little bit of a descending triangle. Lower highs, flat bottom support. We need to see it actually reverse off of a double bottom and a higher high first before we actually are in the clear here with MRIN, not trying to get involved with this and it start cracking that 850 support and moving even lower on MRIN. So right now, just looking to see what we look like around this downtrend around VWAP, see if we can start moving back up for a possible entry here towards the end of the day. DVAX is another one that's trying to bottom out here right around this 1950 level. But it's just kind of iffy right now. It's looking like the sellers are definitely trying to bring this down below that 1950. And I mean, it does have room to fall. You know, back to the VWAP. Maybe it tries to find support at VWAP. But looking at the chart, back down at like 1820-ish, 1830. They're on DVAX. So, you know, we are going to be watching DVAX as well coming into the end of the day. But other than that, guys, there's nothing like right now setting up as far as like a go-to, let's get involved. ONTX. ONTX is starting to get a little bit of hype right now, guys. ONTX is starting to get a little bit of attention towards it. Can remove all that out. Bow. Obviously, we've got resistance right over the highs. We can grab a trend line and connect our lows. At least we know we have some decent trend line support here. Flat top resistance right around that 650-ish mark. Just got a nice little pop right up to that 650. If we see it pull back to that trend line, maybe we have something coming into the end of the day here. Or we can see it simply break over that level of resistance and hold for a possible trade up towards around the 750s. That would be your next target. Breaking over these highs would be $7.50. So that's on ONTX. WIMI, not too much going on now. Every time I start getting into it, I get phone calls. Let me take this real quick, see what this is about. This is Josh speaking. How can I help you? Hello? I don't want to talk to you anyway. That's fine. WIMI, I went on a nice big move today. Right now, just starting to pull back, giving a lot back. Let's see if we can hold above this level of support, right around that 420-ish mark. First spiking high from pre-market. When we broke above here intraday, pulled back beautifully to that level and ripped up even higher. So we do have some decent support here on WIMI, right around that 419, 420 level. So WIMI with 420 supports. Right now, resistance would be back up towards around 450. Anything over 450, you can definitely see it back up towards around the 478, 479 level, and then possibly up to 5 and then 523. Let's see if this one starts to reverse right now. Just stuck in this downtrend. Nothing going on right now with WIMI. Just curious to see if this one does hold above that 419 to 420 supports. Nothing going on with AEMD at this point in time. MRIN. Again, it's just there's no crystal clear setup. Nothing really happening with MRIN at this point in time. So right now, the top two, I would say number one, ONTX. This one does have a nice uptrend support. Either A, we come back down, hold the trend line for a trade up back to that 650 level. Or we see it break and hold over 650, and we start seeing some new highs a day up towards around 750. They're on ONTX. WIMI, just watching to see if this one can hold above 420. Nothing with AEMD, and nothing really happening right now with MRIN. Andrew, it is never recommended that you turn a day trade into a swing trade, right? So if you got into the market, you got into this trade anticipating it's going to be a day trade, 5, 10, 30 minutes, right? Your goal was to buy here and sell there. And now you're not selling. Now you're still holding, right? It was intended to be a day trade. There was no intentions on it being a swing trade. The worst thing that we can do as traders is turn a day trade, a short-term trade, into a long-term investment or into a swing trade. So we never want to take a day trade into a swing trade. So to answer your question, yeah, I would get out of AEMD because you just don't know what it's going to do overnight. Is there a good daily technical setup that suggests AEMD can move again tomorrow? Not really, right? Hit highs of $5.99. It's at $4.99 right now. It's given a lot back, over $1, all the way back down towards around $5. You know, if you're break even and you don't like it anymore, take your break even, right? Break even's better than a loss, right? So go ahead and take that break even. And if it sets back up, guess what? You can always get right back in. If it looks good tomorrow, you can always get back in. But the last thing you want to do is take a day trade into a swing trade, especially when there's nothing super valid that really suggests this could be a good swing trade into tomorrow. Again, if we were closing strong, right? If we were up at like $6, looking to break the high a day, looking strong, then I would say, you know what? Maybe we have some good odds to continue higher tomorrow. But right now, hitting highs of $5.99, selling off all the way to $4.99 definitely looks a little weak at this point in time. I wouldn't trust it coming into tomorrow. Angel, absolutely. 100%. It was awesome speaking to you as well. It was good stuff. A lot of great information talked about. So again, I'm glad you enjoyed it. I definitely enjoyed it. And I cannot wait until the next one-on-one. Yeah, absolutely. So the video lessons library, your one-on-one booking, chat room rules, things like that are all going to be located in your member dashboard tab. Even your member dashboard, your affiliate dashboard. You want to upgrade, you want to pause, you want to get your affiliate link. Everything's going to be located in your member dashboard right at the top of the page. Can you guys not hear me? I've been talking for a while. If you guys can't hear me, I don't know what's going on. Say, I've been here for about 21 minutes. Michael on YouTube, what's your opinion on a small account that doesn't have $25,000 the day trade? Swing trading, definitely. You can definitely swing trade because you hold a position overnight. Doesn't count as a day trade, right? You can definitely swing trade with a cash account, right? Under $25,000. Another thing you can do is just make sure that you always have, right? Make sure you always have 50% of your cash settled. So if you have a $10,000 account and it's Monday, use $5,000 maximum. You don't have to use all 5, but cap yourself at using only 50% of the settled cash. Because come Tuesday, that $5,000 that you hypothetically used on Monday will be settling and it will be available for you on Wednesday. But the nice thing, by always leaving at least 50% of your account in settled cash, that means you will always have half of your account to utilize if you do come across a good opportunity and you decide to take that trade. So I would always split up a cash account into 2, right, in half. And you only use half maximum per day. That always allows you to have some settled cash in your account to take advantage of an opportunity if you see one. So, the SPY, the market, the investor, not really liking what Mr. J. Powell's having to say, right? Definitely starting to give a lot of those gains back from that quick pop. So again, this is where it gets interesting. They're going to drill him with questions, and based on his response to these questions, is going to make the market react here a little bit. So I am just kind of listening to what some of these questions are, what his responses are, and really just seeing how that's, reflecting into the market. So what I'll do, because there's not a lot of penny stocks moving, not a lot of things set up right now at this point in time, and the reason for that is a lot of traders and a lot of investors right now are here. They're right here on the SPY. They're really concerned on, okay, what are they talking about with the FOMC meeting, with talking to Jay Powell, right? That's where a lot of interest is. That's where a lot of focus is. Why are we not really seeing a lot of hotness, a lot of heat, a lot of action with a lot of these stocks? Well, because the FOMC meeting and a lot of people are tuning in, listening, and trying to get an idea of where the market could head to next. And that's exactly what we're doing as well. So what I'm going to do, instead of repeating the same stocks over and over and over, I'm going to go ahead and open up my desktop audio. We can all listen into this. This is very important stuff. And if we do come across something, I will shut that part down, and I'm still here on the mic with you guys. And I am going to be actively looking at some of these stocks, and if something sets up, I will let you guys know.
And caregiving duties, including the expiration of extra unemployment benefits, and other things would come together to provide an increase in labor supply. And so we'd get out of this strange world where there are lots of unemployed people and a high unemployment rate, but a labor shortage. And so what happened was Delta happened. And you have this very sharp spike in Delta cases. And I think, so that affects, for example, when schools are open 60% of the time, or when they're always at a threat of being closed because of Delta, the Delta variant, you might want to wait. Rather than going ahead and taking a job and starting work only to have to quit it 3 weeks later, you're going to wait until you're confident of that. So some of that may not have happened. Also, people didn't, as you know, hiring and spending in these face-to-face service industries, travel and leisure, it just kind of stopped during those months. So that really the big shortfall in labor in jobs was largely in travel and leisure, and that's clearly because of Delta. So that all happened. And so what we know is that it didn't happen. I think there's still, it may just be that it's going to take more time, but it still seems that inexorably these are people who were largely working back in February of 2020. They'll get back to work when it's time to do that. It just may take longer time. You're right, though. It didn't happen with any force in September, and a lot of that was Delta. In terms of you asked also about the test for November. I think if the economy continues to progress broadly in line with expectations, then I think, also the overall situation is appropriate for this, then I think we could easily move ahead at the next meeting, or not, depending on whether we feel like those tests are met.
Well, if I just quickly follow up, I mean, what?
So yeah, ARQQ, right? ARQQ had a nice big green day, opening up around 28.50, hitting highs of 38.88. This was one that we had on watch yesterday for that new all-time high over those prior day highs, which we got, and since then, slow and steady. But right now on ARQQ, I wouldn't be too crazy about it. Nice big rip to the upside, right? Pull back, healthy retracement, new high 38.88, pulling back, and right now it's just looking a little weak, right? Looking a little weak. We saw that initial divergence set in. We saw the stock pulling back. Yes, it just broke its downtrend. It's trying to get some action, but it doesn't really have the volume that we had today here on ARQQ to get this stock from around $29 all the way to $38.80. Right? We just don't really have that volume right now. All right, 32,000 shares traded, 14,000 shares traded, 12,000, 7,007, right? We're trading like 720,000 shares on every 5-minute candle, right? We're saying not even a 1-minute candle, a 5-minute candle. Look at the volume we were trading earlier today, 70, 100,000, 200, 300, 300, 100, right? Right now, we can see that we just don't really have the volume to get ARQQ going. And the reason for that is a lot of investors and a lot of traders right now are focused on Jay Powell speaking with this FOMC meeting, right? The reason why we don't have a lot of hot activity and a lot of action and a lot of volume with a lot of these stocks that we have been watching right today is simply due to that 2:30 meeting. So right now, the rest of the day may be pretty slow, right? Just because we don't have that volume that we had early on this morning. And we can see that across the board, right? We can see ONTX, yes, it's trying, but since that 2:30-ish mark, we haven't really had a lot of heat. WIMI, right? Just losing a lot of attention. AEMD, not doing anything right now. MRIN is trying to get a little activity towards it, but is this a good setup? Do you really want to buy here at 933? And if so, why, right? If so, why do you want to buy here at 933? What do you see? What is your reasoning to get involved on MRIN right now, right here? I can't see a reason, right? We're still underneath VWAP. We have yet to completely reverse on MRIN. This stock intraday is downtrending, right? We have our high, lower high, lower high. Until this stock gets a higher high, I don't think we'll see too much with MRIN. So right now, you know, it's popping up here and there, 20, 30 cents, 20, 30 cents. But realistically for, you know, those small accounts, there's nothing worth getting involved with MRIN right now at this point in time. And, you know, go back and look at ARQQ, right? ARQQ just doesn't have the volume to get this stock going at this point in time. But let's say you're in, right? Let's say you're in, you're like, where could it go? Well, you do have some room back up towards around 37.34 resistance, right? So you maybe have another dollar to the upside, 37.34. Anything over that level, you're looking at 38 and then 38.88 right off those highs. Support right now would be the VWAP, right? So you had some light support right around the VWAP area, right around 35.69 on ARQQ. But if anything, you know, if we do not get the high a day and we have that pop, a higher high, and we come back up into that 37.34 resistance and actually see it get rejected, you may start to see it work its way on back down out of a possible little head and shoulders formation there on ARQQ. So, I mean, the risk to reward, not great. The setup, really no clean setup. Anything to really go off of right now on ARQQ, you'd just be kind of taking a gamble. You know, really, if you look at it, just taking a little bit of a gamble. Maybe it goes to 37.34, right? Maybe it pops up $1. Maybe it comes back down to VWAP, which is $1 away, right? You just don't have a lot of, don't really have anything to go off of right now with ARQQ. And that's really across the board, guys, right? MRIN, I mean, it's slightly getting above this downtrend, but it's, you know, it's still overall in a downtrend, building these lower highs and this flat bottom support. So I'm not too crazy about MRIN. I'm not too crazy about AEMD. I'm not crazy about WIMI. And then ONTX is probably the only one that shows some potential this afternoon, right? ONTX definitely showing a little bit of potential. Now, is it going to come back to the down or the uptrend, bounce and then move? Or is it going to go ahead and break over 650? We have to wait. Starts coming back down to the VWAP, starts coming back down to that uptrend. Maybe we have an opportunity. Right now, I wouldn't buy it right at resistance, because what if it falsely breaks out and moves lower? You're just taking an unnecessary loss. Or, number two, we can see it break over resistance, see it hold resistance, and then get an entry for that next leg up.
eliminating inequality and racial
good entry for Bitcoin. I started to make my entries yesterday with you guys. So I started my positions right around that $41,000 area. So my cryptos, everything I was investing in, I am slightly up about 5 to 10%. So it's not a bad idea to start dollar cost averaging in here. I was down about $2,000 less here on Bitcoin. Again, I was getting my feet wet. I believe it was yesterday morning when I started to dollar cost average in to a lot of my cryptos for this potential end of year bull run. So right now, what's a good entry point? You know, if you're going 100% in, I don't recommend going 100% in. I recommend dollar cost averaging in. So again, if you have $10,000, maybe throw $1,000 at it today. Look and see where it's at tomorrow, right? Look and see where it's at Friday. Throw another $1,000 at it. Come back next week, see where it's at. Throw another $1,000 at it. Over the next, you know, 3, 4, 5 weeks, you can dollar cost average into Bitcoin, get a very nice average, and you're not really trying to nail the dip. Again, you're looking at this as far as a short-term investment, short-term swing. We definitely want to scale in, and we definitely want to scale out. So right now, I don't think it's a bad idea to go ahead and start getting your feet wet, right? I went about 5 to 6% in yesterday across the board on all of my cryptos, Bitcoin included.
And it's just not something that we could contemplate, that we should contemplate. I'm not going to comment on particular tactics or things like that. I'm just going to say
and again,
that
in just
I think
the
we
last
can all agree that the United
day,
States
right? In just the
shouldn't
last
default on any of
day,
its obligations, should pay
my
them when it has
portfolio is up
due,
about
and
6 to 7%.
You know, no one should assume that the Fed or anyone else can protect the markets or the economy in the event of a failure.
I'm going to start buying even more. I'm definitely going to start getting my feet wet a little bit more. Go ahead and take this into like a full chart view.
Have you discussed options with members of Congress?
You know, I don't generally ever talk about the conversations I have with elected officials or other appointed officials. But look, you can see that this is a major focus among those who have responsibility for it, and including elected people.
So I was getting my feet wet around that 41K. If Bitcoin comes down towards around 37K, I'll be averaging in even more.
Hi, thanks so much.
Bitcoin comes down towards around 35. Well, 36, I'll be averaging in a little bit more, and a lot of these levels are solely being based on
I was just curious,
this
under what
retracement.
circumstances would the Fed actually
So a lot of these levels are solely being based on, again, this retracement. So all of these lines, these blue lines, if I see Bitcoin at these levels, I start getting interested. I start getting involved.
Of course, very
That's
closely
why,
monitoring
again, when Bitcoin is
Wells
here, I'm not
Fargo's
touching
efforts
it.
to fix its widespread
Bitcoin is there, not touching it. Not touching it, not touching it. Boom. First level I want to get invested in. I touch it, 5%. We come down to 38, I buy more. We come below 38, above 34, and we start accumulating here, and we start consolidating. I start getting even more aggressive. And as I start getting involved with Bitcoin, as I start getting involved with Ethereum based on these charts, right? I'm only looking at Bitcoin. I'm only looking at Ethereum. I'm not looking at ADA's chart. I'm not looking at Ripple's chart. I'm not looking at Matic's chart. I'm looking at Bitcoin. I'm looking at Ethereum. When I start to cost average into Bitcoin, I start to dollar cost average into Ethereum, I dollar cost average into every other crypto as well, as far as ones that I actually want to own.
Thank you for taking my question. You noted earlier in the press conference that you weren't aware of the trading activity of the Boston and Dallas Fed Bank presidents. As you know, all 12 regional Fed Bank presidents just went through the renomination process earlier this year, and Governor Brainerd described it as a rigorous process at the time. So I want to know, did anybody at the board level know about the stock trading activity? And going forward, do you still have confidence in the Dallas and Boston Fed Bank presidents to do their job?
So these, I don't need to tell you, people file these reports annually, and I think they were just quite recently filed for 2020. So I don't have any reason to think people at the board would have known about particular trading that's going on. They will see that. There are people at the Fed who see that. See the trading reports when they're annually filed. In terms of having confidence in that sort of thing. I think.
And I think we may see the SPY continue down if it can't break above 438. So if the SPY cannot get back above 438 and continue higher, I think we'll start to see the SPY working its way back on down from a technical standpoint. But again, as Jerome Powell is speaking, anything could happen. But just looking at the technicals, I would expect to see a possible rejection off 438 for the next leg down. So right now, over 1550 on ATER, room to 16, and then 1667. Support right now on ATER. You're going to be back down right around that $15 level on ATER for support. Did they have any news just drop? No. 13.15. So, I mean, about 2 hours ago, we had call sweeps, $15 call sweeps near the ask for October 15th. Quite a few of those came in, about 100 contracts. And then another 100 on the same exact chain and the same exact strike. So we had some, I mean, sweeps pretty much all day. Call sweep, call sweep, call sweep here on ATER. And again, ATER still has a lot of great potential. And this is something that we were nailing on Monday, right? Down when this stock was at like $10, $10.50. We were looking at ATER because it still had some great potential to the upside. Right now, if you look at the daily chart, you're just kind of chasing this back on up. If you're not already in for a swing trade, I wouldn't get in. Now, for a day trade standpoint, we do have potential. $15 support. We also obviously have 1550 resistance right here near the high a day. Anything over high a day, room to 16, room to 1667, and then a big window up towards around $18 here on ATER. CNBC channel was just cutting you off. Well, there goes the SPY trying to get back above that 438. You got the SPY trying to get back above that 438 now. Let's see if it can actually hold on up. What's with AFRM? Yeah, that's getting a lot of hype towards it right now. AFRM. They had some news this morning at 9 o'clock. A little pop out of the gate. Didn't do anything, but now it would be safe to say that the markets are doing okay. The markets are reacting good to what's being talked about right now. So we're starting to see a lot of these other stocks get some attention towards them. AFRM did have news this morning. They launched adaptive checkout, bringing greater choice and flexibility to merchants and consumers. So we had a press release this morning. It had some activity, completely faded and failed, but now we're getting some end-of-day action here on AFRM. Support on AFRM, good support, would be old resistance right at 111.15, right around 111.15. AFRM has room up to 112.77, right where we're at now. Anything over 112.77, your next target would be 114.26 here on AFRM. So if this one continues the rock and roll, you could definitely see it to 114.26. But right now, we do have some resistance right around 112.77. You know, SFIX had good Q4 earnings. Everything in the article, everything in the press release was beneficial, was positive. I had some, not high hopes, but I had good expectations for SFXI today. And as the market's reacting well, right, based on what's being talked about, that could definitely allow SFIX to do its thing. So with that being said, I think SFIX has potential to break that 42 to get that leg up to 43 and then 43.80. Right now you have light support right around that whole dollar at 41. Could definitely be that higher low for the break on out of this cup and handle formation that's trying to form. The only thing that we just don't have right now, right? We're not really seeing a lot of activity on the time and sales on the level 2. There's not a lot of volume. There's not a lot of momentum. There's not a lot of movement. It's pretty stagnant right now. So, I mean, you got a couple orders here and there coming through, but nothing crazy to really get this thing going. So, keep SFIX on watch above that 41. If we start to see some volume move in and some of this momentum pick back up, yeah, absolutely. I definitely think we can see this breaking over that $42 level here on SFIX for that leg up to 42.47, 42.97, and then 43.80. Just the only thing is there's not a lot of volume. Again, we've said this once. We'll say it again. Where's the focus? Right here, guys. This is where a lot of the focus is just in the markets alone, right? You know, people, you know, over here on the Dow. Traders on the Qs. Got the SPY. Got the NASDAQ. JR Shots, what's happening with the SPY right now? The very anticipated FOMC meeting. Mr. Jerome Powell is currently speaking in regards to tapering, inflation, the economy, unemployment, interest rates. Again, a very anticipated meeting with the Fed today, and that's exactly what's going on. All right, so that's what's happening with the SPY. That's, you know, one of the biggest reasons why the overall market was kind of just slow, right? Slow today, and now it's starting to pick on up with some volume and volatility, and now we're starting to see that volume and that activity from some of our other plays today, right? Like ATER, POAI, a lot of these other stocks that were moving, now they're starting to lose that attention and lose the volume as the focus is being shifted from there to the SPY, to the indexes. So right now, the fact that ATER broke above 1550, where's your new level of support here on ATER? Back down at 1550. We had room to 16, 1667, and then 1797 on ATER with support right now, light support, being right around that 1550 mark. I got time for questions right now, JR. I got time right now. So, shoot. I say that's okay. Everybody knows what's going on right now with ATER. We have 1550 support, $16 overhead resistance, and then room to 1667 if we break above 16. If we crack below 1550, you can find support back down around $15.12. That is the only stock really with any kind of opportunity right now. If you look at ONTX, I mean, ONTX, if it breaks over the 650 and then 677, you could see it up at 750. Right now, you have uptrend supports here on ONTX. Is there anything with WIMI? Nope. Anything with AEMD? Nope. Anything right now with MRIN? Nope. So the top two stocks, ONTX, trendline support with 1650 resistance. Anything over 650, room to 677, and then 748. ATER, we had 1550 support. We crack below 1550, room down to $15.12 with 16 resistance, 1667, and then 1797. So if you do have a stock that's not on the list, that is absolutely okay. I'd be more than happy to take a look at it, more than happy to give you my analysis, and maybe it has some opportunity for a swing trade that would benefit some other traders here inside of chat as well. So definitely feel free to ask. I'm more than happy to answer your questions and help out. GOTU, number one on the leaderboard, GOTU. And I was looking at GOTU, but I didn't really see anything that really stood out to me, right? I mean, this stock is showing signs of weakness. All right, so first things first. Yes, it's in a nice uptrend, right? It's in a nice uptrend, but we're now starting to see it's losing some momentum, right? We're actually starting to look like we're going to curl on over. It's not in a nice, clean, steady uptrend. It's actually looking like we may start to reverse here on GOTU. And the other thing that I notice is the RSI. So as the stock is making higher highs throughout the day, what's the RSI doing? The RSI is making lower highs throughout the day. So that is a sign of weakness. That's a sign of a possible reversal, that the buyers are losing momentum, right? That the buyers are losing momentum. Now, we could definitely start to see this curl on over, okay? Let's go ahead and remove that out. We're on a 5-minute. Let's go to a 1-minute chart, right? Do we see anything on a 1-minute chart? Well, we have flat resistance right across these highs here, right at 327. It's trying to find support back down towards around 308. Do we have like a trend line we can throw on the play? Significant low. Can we connect it out? No, not really any kind of valid trend line. It's just it's a big gainer, right? It's up 29% on the day, but looking at the chart, now I can spot a couple nice little entries here, but right now it is looking a little weak at this point in time. In my honest opinion, I would think that GOTU would continue to move lower here end of day. Right now I could be wrong. I'm not right 100% of the time, but just looking at where it was at the start, where it is now, looking at my indicators, looking at the volume, looking at current price action, I see that we officially put in a lower low, right? Higher high, higher low. 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 Lower high, lower low, right? So we're in an uptrend, 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 uptrend. Now we're starting to show signs of moving into a downtrend on GOTU. So right now, the only thing that I could say is it has okay support. Nothing strong, right? Right around 308. Better support back down at 3. Why is that? Well, it's the prior high before it broke out. It was a retest low. It's also the VWAP, and it's also a psychological round number of support as well. So $3 is a little bit better of a level here on GOTU. If you put a downtrend right here off the highs, maybe we can see this set up for a possible downtrend break. But right now, it's not as clean, it's not as clear as what we would want to see for maybe like the boom, boom, bang, right? Or maybe the downtrend break. It's not as clean as we really like it for those 80-20 downtrend break setups. So right now, support, good support, back down at 3. We know that. Good support at 3. We have resistance right here at 327 and then 333. So it's at 320. So that means support's 20 cents away and resistance is 13 cents away. So just looking at that right off the bat, keeping it simple. Support and resistance, right? Resistance is close. Support's far away. Do we really want to be going long when we only have about 12 cents to the upside, but we have 20 cents to the downside? Probably not. All right, probably not. And even if it breaks over at 333, coming back to the daily chart, you have a lot more resistance right around $3.40. Let me take this real quick. I think it has something to do with my my closing on Tuesday. 1 second, guys. Hello? This is him. No, so I actually went through twice to do the quote and the application, and I even put my payment information in to go ahead and pay for it, but it kept returning an error message, so I already signed up with somebody else, and I got it taken care of the same day when I was going through the quote. Gotcha. Yep, no worries. Why, thank you so much for the phone call. You as well, thank you. Bye-bye. Oh, my bad. Whoops! It's all good. So looking at that picture on GOTU, right? Looking at that picture on GOTU, looks like it's a 1 minute chart. I mean, honestly, it's just very, very, very choppy and scattered price action. Maybe that's just the way that TradingView is. It doesn't look as choppy and as scattered as what I'm seeing on my chart. But again, I'm trying to line up the levels that you have. I'm trying to zoom in here a little bit. What time was that? That was at 1651. Are you 1651? I am very confused right now. Because 1600 is the close of. Is this a prior day? Maybe this is a different day. Is this today? Was this last night in post market? I'm trying to get an idea because that's showing that the current time for you towards the right is 1820. So was this last night? Was that about your car's extended warranty? Oh, thanks, Corey. Corey's like, man, you're so polite on the phone. I try. I thought I hit the mic. Today at 16:56. That's what I don't understand, because right now it's 15:27. That's what I don't get. Unless you're ahead of me, JR Shots. Unless you're ahead of me, that would make sense. But if you're behind me, if you're like Central Time, you would be, you know what, like 1200, 0100. Are you ahead of me? Are you ahead of Eastern Time? That would make a lot of sense. So that would be maybe 1456 my time. Maybe you're a couple hours ahead. I'm not sure. So you're looking at it right here, right around 1456 my time, Eastern Time, right around that 2:56, right before 3 o'clock. So anyway, regardless of the time, you know, if I'm looking at this correctly, you're saying 1656 based on your picture of the screen you sent me. That would be mine at 1456. That would be just a symmetrical triangle formation there. It wouldn't really be a boom, boom, bang, right? Because you had the higher lows, but you had lower highs. So if anything, it was just in this symmetrical triangle formation on GOTU. On GOTU. So during that same time, if we're looking at the same time, right, from the high at 1333, right, and off these lows, if anything, that was just a symmetrical triangle formation, right? Because you had the lower highs, but you also had the higher lows, forming a triangle, okay? Let me give you an example of the downtrend break or the boom, boom, bang. Do we have one on anything today, like a good one? There wasn't like a lot of killer setups today, right? There wasn't a lot of killer setups. No. So if we're looking at, what was that ticker again? GOTU. All right, so GOTU. Those are squeeze formations. CSO Lano. That triangle is usually a bull trend though, right? So symmetrical triangles are totally 50-50, right? Symmetrical triangles like this on GOTU are normally 50-50 setups, okay? 50-50. They are squeeze formations. They are breakout formations, but what way are they going to break out? We don't know. Symmetrical triangles typically are 50-50. Now, you can get a couple other separate reasons to take a trade, right? Supports, moving averages, indicators to kind of gauge what way you think it's going to move. But at the end of the day, pure symmetrical triangle formations are going to be 50-50, right? They are squeeze formations. They will break, right? But we don't know which way they're going to break, up or down. So you got to wait for that confirmation, which is volume through the downtrend or through the uptrend to take a position on those symmetrical triangle formations. Now, like bull flags, bullish triangles, right? Like a bull flag, like that's a pennant that forms a little bit of a triangle like that. Yeah, those are going to be bullish continuation patterns. Are going to be like those bull flags. But something that just works itself in naturally into a symmetrical triangle, those are going to be 50-50. Now, a bull flag would have been a big leg up, then coming into that kind of symmetrical triangle, if you look at it that way, right? That's a symmetrical triangle the way it is on the chart, right? Because it just kind of doing its own little thing, yada, yada, and then it just forms inside of this symmetrical triangle. Those are going to be 50-50, right? Those are going to be 50-50. 50% of the time, they'll break hard to the downside, which in this case it did. 50% of the time, they'll break hard to the upside. You just have to wait for that volume to move in and actually see one of those candles below or above the trend line. But for this example, if GOTU would have had a big run to the upside, then consolidated like this, now that's a bullish flag because you have the leg up. You have the pull followed by that period of consolidation. Now you're looking at a bull flag, not a symmetrical triangle formation. Now it's a bull flag, and bull flags are then 80-20 bullish setups for the break to the upside. Exactly. So the only thing that differs is the way it came into it. Absolutely. 100%. Because again, a bull flag or a bullish pennant, right? A bullish pennant, the two lines converge. The two lines cross. But it depends on how the stock came into that level. If the stock is kind of just doing one of these things, right? And then it gets inside of this squeeze, right? You don't have the leg up. You don't have that rip to the upside. So if it comes into it like this, right, it's going to be a symmetrical triangle formation. Those are 50-50. But if the stock comes into it like this, right, it's consolidating the same exact way. It's in the same exact triangle formation. But it's how the stock came into this consolidation. If it rips to the upside, right, 3 to 5 candles up on increased volume, right, the stock is ripping. The stock is running, making consecutive highs, highs, and then it forms this period of consolidation, right? Now that is a bullish pennant. Those are 80-20 setups that we can continue the trend to the upside, right? But if it's just kind of just, you know, chopping around, not really shooting straight up, right? Not really having a big leg up and then consolidating, or not having a big leg down and then consolidating, right? Because a big leg down into this consolidation would be a bearish flag where it would continue its trend to the downside. But if the stock's just kind of all over the place, like woo, right? All over the place, and then it just finds itself in this symmetrical triangle, those are going to be 50-50, right? And the way that we gauge and get our entries is, again, if the stock closes above the downtrend with volume, you would then go from 50-50 to 80-20 odds that stock can move to the upside, because you simply waited for that confirmation close above the downtrend with volume. Same thing, right? While it's consolidating, it is purely 50-50. Now, once the stock closes below the uptrend with a pop in volume, then you start going from 50-50 to more 80-20 odds that stock is going to squeeze and move to the downside. And so this one, it didn't have a big strong rip to the upside, didn't have a big dump to the downside. It was just very slow and steady, and then found itself inside of that wedge formation. We had the confirmation there on GOTU, right? We saw the first candle close outside of that slight uptrend, outside of that symmetrical triangle, and we saw volume move in. Pretty good volume, right? It wasn't really doing anything. No volume, boom, boom. Big pop in volume, boom, boom, and it's starting its new downtrend. ONTX at noon from Sam. ONTX around noon. Whoop. So this would be a good example of the boom, boom, bang, right? Where the stock is in a nice, consistent uptrend, making higher highs, higher lows, higher highs, higher lows, and then it starts downtrending. And while the stock is downtrending, all we're looking for is for that stock that pull back into a level of support. We've already got our starting points of the downtrend. That's point number 1 right here, where we can actually go ahead and click. Then we have point number 2, where it tags it, and that's actually when you can connect the trend line. You have to have the high, and you have to have point number 2 to actually extend your trend line out to the right. Would you guys agree? We're all on the same page? And so now the stock is now downtrending. Point 1, point 2, coming down, bouncing off a level of support into point number 3. And after it hits point 3, after bouncing off a level of support, and here we had 595 support. Why is that? Prior resistance, prior breakout point. Look at all that volume, demand, and we pull back and retested that support right there. So again, we validated 595 is a good level of support. The stock's in an uptrend, and then we start downtrending. Downtrending all the way back down into that level of support. We bounce off that level of support into point number 3. We pull back, put in a higher low, and then we break the downtrend on point number 4, and that's when we have some opportunity to the upside. So ONTX was a great example of the downtrend break, right? The stock hit these highs, it's downtrending. It's downtrending. It's downtrending. At this point in time, we really can't connect a downtrend. We don't know what's going to happen. We can't really connect a downtrend. We need 2 points. So the stock's moving. You're like, okay, cool. Maybe we can go ahead and grab a downtrend and connect these highs, right? And we can right-click that trend line, and we can extend it out to the right. So now we have point 1, we have point 2. Now we're waiting for the stock to come down to support, which we've identified support being right here, that green line right around 595. All we're waiting for is the stock to come down to that level of support, bounce. Okay, there it came down to support. It's bouncing, right? We want to see it hit point 3 and get rejected. There's point 3. We want to see it get rejected. It got rejected. There's your higher low. We're waiting for it to break over the downtrend. Just waiting. There we go. We're starting to see some volume. It's breaking the downtrend. It's above the downtrend. That right there could have been an entry. Because again, you had point 1, point 2, point 3. Before point 3 of the downtrend was hit, we bounced off support. After we hit point 3, we pulled back and put in a higher low, right? A higher low, trying to put in market structure. And then we waited. Now the stock is starting to break the downtrend. You start to see just a little bit of volume move in. Nothing crazy, but it's breaking that downtrend. Wha-bam. Nice big rip there from around what? 612 up to 630. Hey, it's 20 cents a share. Oh, now that's at 640. What did it do? Pulled all the way back. Ended up getting over 640, 650, moving all the way back down to that level of support. So again, that was a nice quick in and out trade. Again, just waiting for the stock to set up, bouncing off that level of support, hitting point 3 of the downtrend, getting that higher low, waiting for the first candle to get outside of our downtrend, which was right there. And then we saw buyers move through, shoot it straight up, 20, 25 cents to the upside. It definitely moved. It was definitely a good little trade there on ONTX. So that's what we would be looking for on those downtrend breaks. And again, moving back over to GOTU, so you can see the difference between ONTX and GOTU. So GOTU, we can see that it kind of just worked itself in to this little triangle formation. It wasn't higher high, higher low, higher low, and then it started downtrending beautifully, and then getting that higher low break of the downtrend, like you see there on that example with ONTX. Can you see the difference there between the two? Right, ONTX, downtrend break setup, the criteria, the amount of tests of the downtrend, what should happen after the third point of the downtrend, getting a higher low, seeing the volume move in, break. Nice downtrend break setup. Then we go back and look at GOTU, and we can see the big difference between the two, right? Just want to make sure you can see the difference between GOTU and its formation, and then ONTX and that formation. Okay, fantastic. So, ONTX was a good example of a downtrend break. GOTU is a good example of a symmetrical triangle formation. And when we saw that candle close below that uptrend and it cracked to the downside out of that symmetrical triangle formation, 80% of the time, the stock will then continue its downtrend even lower. And since that point in time, right, the first candle to close below, we had the volume confirmation. Even if you were making entries at 320, right, it's still down against where you were going short at there on GOTU. So while it's consolidating, just to clarify, while it's inside of its symmetrical triangle formation, it's consolidating, it's 50-50. We do not know which way it's going to go, but we do know it's going somewhere, right? It's a squeeze formation. It's either going to squeeze to the upside or it's either going to squeeze to the downside. So how do we take advantage of that trade? This is the one trade that I don't take in anticipation, right? Because it's purely 50-50. I don't really have high probabilities or odds in my favor because it's truly 50-50. I do not know which way it's going to go while it's consolidating sideways. Now, like downtrend break setups, bull flags, other types of setups, you can get an idea of which way that stock is going to go, right? They already have higher probabilities behind them, but symmetrical triangles are purely 50-50. So how do you get an entry, right? You have to have confirmation. And what's that confirmation? The confirmation is the first candle to break outside of that triangle, whether that's to the upside, whether that's to the downside, with volume, right? You want to see volume while that stock is either breaking down below or breaking above, and that's your confirmation to take the long, or that's your confirmation to take the short. So that is a symmetrical triangle formation, right? So there's all kinds of triangles in the market, right? We know we have descending triangles, right? Sorry, this is very bad. We have descending triangles, right? Those are bearish setups. We know we have ascending triangles, right? Those are bullish setups for the breaks to the upside, right? We have all kinds of triangles, right? You can even say like a bullish pennant could be like a triangle formation, right? It's a pennant, but we already know that's a bullish setup because it came off a big rip to the upside. Symmetrical triangles, right? That's a triangle formation. that's 50-50, right? It can come from the bottom, come from the top, and it consolidates, and you just don't know which way it's going to go, right? That's a triangle formation. Now, a wedge formation, right? A wedge is where the stock is wedging. That was terrible. My bad. So a wedge, you would have a falling wedge, and then you could also have a rising wedge, right? So those would be kind of the idea of what a falling wedge would look like, right? Where it's falling, getting tighter and tighter and tighter, and before it breaks to the upside, or a rising wedge where the stock's in an uptrend, moving higher, moving higher, moving higher, but it's getting tighter and tighter and tighter until it eventually cracks to the downside. So those would be wedges. You have falling wedges and rising wedges. But what we were just looking at on GOTU was just a textbook perfect symmetrical triangle, right? Because that's just the way that it is, right? That's how those chart formations work out, right? As a newer trader, I was the same way. Well, the stock's already falling, so why would a falling wedge be bullish, right? If anything, you would think that it would break out of the wedge and continue lower. But again, from my education, from my experience, being mentored myself by many, many traders, and just from the 7 years of experience in the market, when we see a stock in a falling wedge, 80% of the time, they break out of the wedge to the upside, right? Those are considered to be bullish. It's crazy, right? When you see a rising wedge, right, where the stock is in a freaking uptrend, right? The stock's in a damn uptrend. The stock's ripping, uptrend, right? The trend's your friend. Trade with the trend. You would think that the stock would continue higher, but it's getting tighter and tighter and tighter. It's basically losing momentum. Think of it that way. As the stock's in this uptrend, getting tighter and tighter and tighter, what really is that stock doing? It's just losing momentum. Each leg up is not as aggressive. Each pullback is not as aggressive. It's losing momentum. It's dying on down. And eventually, you lose that buying momentum, and now selling momentum moves in, right? That's why you see them crack to the downside. Same thing with falling wedges. Really, if we just think about it, what's really taking place? We're just losing momentum, right? Sellers are in control, driving the stock down. Sellers are in control. Sellers are in control. And what it's doing is it's just getting tighter and tighter and tighter. Each leg down is not as substantial. It's just losing momentum until we see buying momentum pick back in. And that's why they're considered to be bullish setups, right, for falling wedges. Simply because sellers are losing momentum in this downtrend, causing the stock to get tighter and tighter and tighter until buyers decide to go ahead and step back in. Same thing with rising wedges. I know as a new trader, it was a little confusing. I'm like, what? Doesn't make sense. The trend's your friend, right? It's trending down. You would think it would continue to move down. But again, really, if we just kind of dissect it, what's really taking place? Sellers are in control. Sellers are in control. Sellers are in control. And while it's getting tighter and tighter and tighter, what is that telling us? That, sellers just losing a little bit of momentum, right? They're not able to drive the price as far down as they were before, right? They're losing momentum. They're losing steam. There's less and less sellers to where we could see a transition from sellers and that selling momentum and see buyers move back in and pick up some buying momentum. Because if these sellers really had momentum, right? In that same example, if sellers really had momentum and they're really driving that price down, right? Do you really think it would continue to hold that wedge? No, sellers would continue driving that price down. All that selling momentum. So basically by it consolidating and forming that wedge formation, all that's telling us is that sellers are just losing momentum and they're not able to drive the price lower. It's actually able to hold inside of that formation. They continue losing momentum until eventually buyers say, you know what? These sellers are done. We're going to take it back to the upside. So right now, 348 in the markets. What's up with the SPY? SPY whipsaw up and down, up and down, up and down. Yeehaw! So right now with the SPY, we still have some concerns in the market, guys, right? I haven't really heard or seen any articles talking more about the Evergrande deal and everything that's going on over in China. But again, it really depends on, do they make their payment or do they default on their payment? They make the payment, they're good to go, right? For a little bit more time, and then they can work on, China going to bail them out. How are they going to take care of this debt? If they default on that payment, that's going to cause some issues, right? So right now, it's still up in the air. Are they going to make their payment or are they going to default, right? If they make it, we're in the clear for another 30 some days, all right? And then there's time for them to figure out how they're going to take care of this debt and make those future payments. But if they default, yeah, get ready for some more downside in the market, because that will ripple through the U.S. economy. That will ripple through the markets, guys, right? There's a lot of exposure to that over in China. So with that being said, something to still be mindful of. Just because we saw a good FOMC meeting today, just because we're having a green day, doesn't mean we're in the clear yet. Did they come out with a settlement? I have not seen anything. I've been researching. I've been looking. If that's the case, I would really appreciate maybe like a link, an article for the team so we can dive into that. But again, throughout the day, I've been actively looking to see, again, settlements. Are they making their payment? Are they leaning more towards the default side? How is this going to pan on out? Because again, until all that is panned out, we're still not in the clear. Let's see what Josh has to say. I like this guy. He knows his stuff.
Yeah, listen, we do a ton of custom indexing, and we utilize days like Monday for what's called tax loss harvesting, which from a wealth management perspective is like one of the highest value add tasks we could carry out. And the reason why that's so important is because one of the things that we're always reminding clients is that you can't eat pre-tax returns. So you really want to be mindful of both sides of what you're doing when you're buying and selling. So I think it's a pretty safe bet you could make that when you see a down 600-point Dow, we're not counseling clients as to why we should take less risk. What we're doing is making sure our allocations are where they belong, where there are tax loss harvesting opportunities, we take them, and we're paying as little attention as possible to things like an Evergrande restructuring, which is totally irrelevant in our clients' lives. So I think the best way to think about the opportunities that have been granted to us this week are to say, if you weren't a panic seller over the last few days, you don't have to be a panic buyer today. And that continues to be the way that we think about these types of moves.
1% gain now for the S&P. Large institutional investors are weighing in for the outlook for stocks and for the Fed in the first ever Delivering Alpha Investor Survey. Leslie Picker with the details for us. Leslie.
Hey, Sarah, that's right. The survey of 400 money managers was conducted this week, but before today's Fed announcement, showing, though, that 71% believe it's time for the central bank to taper its bond buying program. That matches respondents' views of inflation, with only 19% in the camp that believes it will remain in check. However, 43% believe inflation is only temporary. Investors think the implications for the market are that the 10-year yield will rise, with 70% again seeing a jump there. Only 3% see yields going lower after the Fed starts tapering. The majority believe the overall American economy will strengthen. 30% think it will do so in the short term, while 28% say that improvement will come in the long term over the next year or so. Guys.
Leslie Picker, Leslie, thank you.
All right, team. So, with that being said, that almost wraps up our trading day. Nice opportunity in the market this morning. I see you guys were absolutely crushing it. Me, on the other hand, still just dealing with a little bit of a red streak, which hasn't happened in months, but it was bound to happen. I take it for what it is. I respect it. I like it. It's a part of the game, and I just know that green days are right around the corner. So all I can do is just manage my risk to the best of my ability, sit on the sidelines as much as possible, and stick to trading only the good setups. And again today, yes, it was a red day, closing down over $150. I'm down $162.95 on the day. Am I upset? Am I discouraged? No. Why is that? Because I was happy with all of the trades I took. What do you mean, Josh? You're red. How are you happy with the trades? Because I was a professional. I analyzed the chart, right? I assessed everything. My entries, my stops, my size. I knew what my losses would be before entering the trade. I knew what my profit potential could be, and I accepted the risk. I did everything that I was supposed to do as a professional trader. I was disciplined, patient. I took only the best of the best setups. Again, not over positioning myself, not over trading, but sitting back and taking the setups that I believed in, that I've taken a million times in the past, and I've seen consistent results with. So that's why I'm not upset. That's how I'm able to walk away from my day happy, okay, because I managed that risk. I was happy with the trades. I was happy with the execution. Yes, I got stopped out. Could be a little frustrating to see myself get stopped out of 3 trades back to back to back and watch all of those trades work, right? It can be frustrating, but that's a part of trading. And I accepted that, and that's what keeps me going down the right path, guys. So yes, down 162 on the day, but a good day. Happy with my trades, happy with the executions, happy with the way that I managed my risk. Living the trade another day, not blowing up my account, and I can happily walk out of this office and say, you know what? I performed well today, right? It was a red day, but I still performed well, and I managed that risk the best I could, and I did a great job doing it, guys. And I'll be back here tomorrow, ready to rock and roll, and eventually trying to break the red streak. So, with that being said, do we have any final questions, comments, or concerns before we go ahead and wrap up our trading day? And while those come in, if there's any, let's go ahead and get our post-market scanners up for you guys. Live stream is open till 7 o'clock. The chat room's open 24/7, 365, but the live stream and scanners will be up until 7. Angel, have a good evening, and I know I'll see you back here right at 7 o'clock, my man. Corey, 165. Nice. Good stuff, Corey. Locking in some good profits there. And I know some of you other guys were locking in profits, and I'm going to have to send you guys some emails like, hey, you said you're crushing it, but I don't see your profits. What's kind of going on there, buddy? What's going on there? I'm going to make that a rule. If you don't post your profits and you're talking about profits, you're banned for a day. I'm going to ban you. No, I'm kidding. So with that being said, actually it wasn't a red day. It wasn't, because my swing trade on SOFI was about 240. So honestly, let's call it break even. I was actually slightly green, but we'll call it break even. So 220 on SOFI, down 160 on my equities account. So looking at the two, right? I trade both of those small accounts. It was a decent little day. It was okay. It was technically green, so I'll take it. All right, guys. Well, go ahead and end your day with those amazing profits. Have a wonderful evening. If you're still here, be smart, trade safe. Again, we have these scanners up and running for you guys. If anything pops up, you guys will be prepared, ready to rock and roll. Other than that, awesome day. Congratulations, traders. And once again, if you have any questions, please do not hesitate to let me know. Send me a message here inside the chat or send me an email, josh@alphadaytrading.com. Have a wonderful evening, team. And I will see you back here bright and early at 7 o'clock a.m. Eastern Standard Time as we kick off our Thursday trading. Once again, team, good work. And I'll see you guys back here tomorrow morning. Take care, everybody.